All right, good morning. Good morning. All right, good morning, everyone. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Friday, May the 15th. We got about 8 minutes to go, 7 minutes 30 to be exact. Okay, stocks are down. The futures were down, still down 1%. The futures, that's a lot. A lot. All right. Let's see. Apple is down here below yesterday's low. You can see that orange box there. Pre-market right here at the bottom of yesterday's range. These stocks are getting really extended. Days like today, I'm not surprised. Shake a few people loose. Might be a dip buying opportunity. We'll see how the 1 minute charts set up. It's gorgeous outside. It's about, I don't know, 60 degrees, sunny, a light little breeze out of the east, it seems. Qualcomm, Mr. Kurtz. Let me see. Or is it Miss Kurtz? Qualcomm. Let's see, Qualcomm. Qualcomm needs to show signs of buyers. Nothing yet. Let's see what it's doing pre-market. Okay, so it ran up from earnings. Qualcomm, you can see RSI is dropping down. All right, so strength of trend is obviously weakening. Qualcomm. Okay. MACD, stochastic, everything is rolling over, looks like. Qualcomm. So I'm sure it'll be fine. It's got a lot of growth engines kicking in, but just short term, I would wait. I would wait for it. All right, I'll mark this chart up for you. Okay, we got 5 minutes to go. 5 minutes to go. Okay, there's no hurry on Qualcomm. You can see that it's pulling back. It could go all the way down to the 200-day. I don't think it will, but anywhere between here and there, the 200 days right here at around 160, 159, something like that. All right, we've got 2 minutes and 40 seconds to go. Let's see. We got the whole of the S&P 500. Let's see here. No, we've got a lot of stocks declining, many stocks advancing, and it looks about to be 30, 30, 30, 1/3 advancing, 1/3 unchanged, 1/3 declining. So we'll have to be watching for breadth. Okay, we'll be watching for breadth to give us some signals early. We had junk bonds looking pretty good yesterday. Okay, here's advanced decline. These had moved down below the zero line. NASDAQ seems to be holding up the best. You can see it's closest to, only dipped a little bit below the zero line. S&P is next, and then you've got small caps and mid caps. So we need to see breadth pick up. We know that today's OPEX. All right, there goes all the New York FANGs are getting bought. New York FANGs getting bought right here. New York FANGs, shorts covering, obviously. Okay, you can see shorts are starting to cover. Okay, we've got 1 minute, a little bit more than a minute to go. Yep. All right, so first few minutes, first 10 to 15 minutes, shorts covering. Okay, there goes Apple. All right, I might take a few more things off. Let's see what we get out of Apple this morning. Okay, what we got? 30 seconds to go, 30 seconds. We'll also be looking for junk bonds to follow through, maybe push a bit higher. Junk bonds, it looked good this morning, yesterday to start, and then we faded back to the 50 days. So we need to get off of this level. This is telling you these people who will be adverse to risk, that's telling you that they're neutral right now. If it starts to drop, they'll be bearish, okay? And that would be bearish for the markets. We're about to open. There we are. Okay, we are open. Apple, let's see how far they take this. Apple, Netflix. Okay, Netflix has been moving lately. -800. Netflix. Okay, Netflix. We need to get above these wicks from yesterday. All week we've been wicking right in this area, just right on 89. So we need to get above the 90 level. That would clear the 21 day. All right, Netflix, Google. Google, I sold my Google yesterday, right? I'm pretty sure. Yeah, I sold my Google yesterday. Okay. Okay, futures are rising. Futures. Okay, let's go see what hedge flows look like. Hedge flows. Hedge flow. Oh, there it is up there. Couldn't see it. It was way up there, dropping off. Hedge flow line. Okay, give it a few minutes. IO and Q dropping off. AAOI dropping off. Okay, futures climbing. Futures climbing off the low. Hedge flow line continues to drop off. Okay, got some support in this area.
Low tick alert -800.
Those low ticks are the reaction to the move lower. We'll be looking for high tick alerts if they start buying. Okay, what is Cisco doing? Cisco at the bottom of yesterday's range. Cisco's hanging in there. Very, very interesting. Cisco hanging in there. You can see the doji at the bottom of yesterday's range. If they start building a base up here, that'd be interesting to note. I'm not going to chase anything up there right now. Futures continue to move a bit lower. We have OPEX today. Netflix continues. All right, Netflix continues to show some strength. Okay, Netflix is clearing this week's highs so far. About to clear this week's highs. Netflix. Tuesday high right here. All right, we're clearing this week's highs.
Low tick alert -800.
All right, back down. Microsoft on the move. Microsoft. Okay, Microsoft is trying as well. Okay, we're going to get something going on Microsoft. Too early to tell. That's a good idea. We should check out Core 1M. Okay. it tagged 805 yesterday, 806, something like that. Okay. A lot of calls getting squashed right now. Okay, so you could view that as if you held on to calls and they're short duration, they're getting smashed right now. Core 1M. Okay, thanks. So supposedly Ackman has a position, and Michael Berry. Michael Berry said he was in a position too. Okay, I can't type there, Joel. um, Supposedly, Ackman has got a position in Microsoft. Okay, ServiceNow. Okay, ServiceNow. Would you consider them software? ServiceNow. NOW. NOW. Okay, let's see what that looks like on the 60-minute. Okay, range bound, but looks like it's headed back to the top of the range. ServiceNow. Okay, ServiceNow. Okay, overbought real quick, turning back down. Microsoft. Okay. Okay, Google. All right, stocks are off. Stocks are off. Microsoft, nice move on Microsoft. Microsoft. All right, pulling back in. Okay, so we're growing here, adding a few stocks, advancing. Let's see what up down volume looks like. It should be down. Survey says, come on, Thinkorswim, you're so slow. 2-1 down on the NASDAQ Composite, 2-1 on the the New York Stock Exchange, almost 3-1 on the Qs, 1.5 on SPY, 1.6 down. The Dow Industrial is 1.5 down, and IWM 4-1 down. Okay, there goes Microsoft pushing a bit higher. Microsoft. Hmm. All right, Bill Ackman. Yeah, I just confirmed.
Low ticker alert minus 800.
All right, Microsoft, Bill Ackman supposedly disclosing a massive new position in Microsoft. All right, Ackman capitalized on a 26% pullback from Microsoft's 2025 record highs. Stock fell due to market anxieties that heavily artificial intelligence investments would suppress margins. Ackman explicitly compared the potential upside of this new Microsoft bet to his highly successful past investments in Alphabet, Amazon, and Meta. Okay, cool. All right, Microsoft looking for more. Okay, we're overbought right now, so I'd like to get a little dip at least for a 1 minute chart to set up on Microsoft. Let's look at the 60 minute. 60 minutes been in this descending channel. We've been talking about the descending channel.
Low ticker alert minus 800.
Microsoft. All right, so we got this descending channel in Microsoft, basically. This little dip that goes outside the channel, but for the most part, this channel down. We're looking for a break to the upside. Okay. Okay, we got a little dip there. All right, all the New York fangs are mixed at the moment. Let's go take a look at that because that is a signal in itself. Okay, that's a signal in itself to refrain from buying up here. I don't need to tell anybody you're buying at the highs after an extended move, 7 weeks in. All right, so let's take a look. Let's take a look. Okay, weekly, S&P weekly. We could have a shooting star by the end of the day. We're still above last week's high, so technically we have 7 weeks up. Okay. I don't know. This is the reason why we've been taking profits off the table. We're due for some consolidation at a minimum, especially in semis. Okay, let's see where the money is flowing, though. Let's see where money is flowing. Okay.
Low tick alert minus 800.
Now ServiceNow. ServiceNow is up, but it faded. ServiceNow. Okay, base. Dexcom has been active this week. Still trying to get out of this base. CHRW, trucking, Intuit, you know what they do. FactSet, data for the markets. EPAM, these are pretty boring actually. Workday, maybe something there. Not really. IT. Dow Jones. CRM. Microsoft. Visa. Okay. Visa. We were looking for the banks to do something. Let's see. Visa. Morgan Stanley back into the range. Morgan Stanley not working. Goldman Sachs not working. All right. So there's some Friday selling. OPEX. We'll see if these follow through next week. All right. Futures are dropping off some more. We're currently off nearly 1.3%. Okay, 100 points on really a lack of any kind of news. It's just the markets are super extended. So anyone who chased up here are seeing a drawdown in anything they bought yesterday. Let's see. Cerebrus, that one's off a bit. Okay. All right, so I took that position off. I took just out. I hardly ever take an IPO, but I just took it 292. Wow, this is all right, starting to come back up. Let's see what it does here. Cerebrus. All right, I'm out of that. I'm out of that. That was a stupid move, Cerebrus. That was a stupid move. That was about 30 points, 35 points there. I usually don't do anything with IPOs 95% of the time. I succumbed to the hype yesterday. When the markets are highs, that was a mistake on my part. Should know better. Generally, on IPOs, I like to wait until you get a pivot high and a pivot low. That usually takes anywhere from a few weeks to a few months. You got to establish options to see where institutions are going to position, call wall, put wall, etc. So that all takes time. Yeah, it's just come to the hype, and I got burned on it. Not bad. I didn't have a big position, but still. All right, watching Apple. Okay, Microsoft. We've got Bill Ackman joining the party now. We've got Bill Ackman. Who else is in this? Bill Ackman. Michael Burry from The Big Short fame. Michael Burry, Infusive Asset Management, Mizuho Markets Americas, logging a 155% quarterly increase in shares. Okay. Cerebrus continues to drop off. When it doesn't do what you thought it was going to do originally, I thought maybe this starts to catch a bid. Cerebrus, it just continues to fade. I was looking for it to continue to bounce and rally. My initial thoughts were, it was offered at 185 or something like that, and it opened up at like what 385, I think, something like that, something ridiculous. Is up in the 300s, 350 or something like that. My original thought was watch this thing go all the way back down to 185 and crush all the people who chased after it yesterday. Anyway, enough of that. Let's see what else is working here. Let's see if we can get distinguish a pattern. All right, so junk bonds are dropping off. Okay, so when junk bonds drop off, that these people who would invest in the markets, they'll only invest on the long side if they are confident the markets are going to start trending. Um, this really hasn't gotten any traction as the markets continue to ramp up over 6, 7 weeks. This is week number 7. So this is definitely something to be considering. Plus core 1M. Core 1M is near 8. It jumped up to 10. It jumped up to 10. Okay, so a lot of these calls getting crushed. Okay, there's core 1M there. Okay, so what else? Let's take a look at a few other things. Let's look at breadth. Breadth is lower today. Okay, breadth is all moving lower. Okay, so it's Friday, so I would wait. If we get any kind of signs of a bounce, we'll see it in hedge flows, I guess. S&P, I'd just be sitting tight, wait for the opportunity. Okay, this I talked about this in the weekend video on Sunday that we were squeezing, but we can go either way. We can go either way. My guess is that we could still move higher. This forms a handle, a little cup and handle above the 50-day. Right now, we're below the 9 and the 21-day. 50-day, 200 days below. Number of stocks above the 20-day continue to move lower. This is pretty wild. The whipsaw here between the number of stocks above the 20-day from oversold to overbought very quickly is noteworthy because this doesn't happen that often. We had this kind of move last year, but it was a little more prolonged. All right, so at some point we're going to get a buy signal. Okay, so you guys should be sitting and waiting. All right, that's really dropping fast now. All right, that dropped 20 points. Cerebras just dropped 20 points from where I sold it, 25 points. Apple turning back up. I'm looking to get into some Microsoft. Okay. All right, let's look at the volume here. Okay, when did he buy? When did Michael buy? When did what period? Ackman buying. All right, trying to see where it looks like Ackman might have been buying over here in April. Let's see. Ackman explicitly stated that he began to buy Microsoft shares immediately following the company's fiscal second quarter earnings report. Okay. First half of February. Okay, so so Ackman was buying over here first half of February when it was moving lower. They locked in a massive chunk of their position when Microsoft pulled back to a compelling valuation of 21 times forward. Okay, so um, it takes them days and weeks to fill positions. So I would say he's just starting to make money off of that entry, looks like. Okay, there goes Apple. Apple on the move. Okay, here goes Apple. Apple. All right, Apple's showing some nice strength this morning. Apple. All right, so Director John W. Stanton from the board personally bought 5,000 shares out of his own pocket for roughly 1.98 million at an average $397 per share. And Microsoft is up from that right now, so he's up as well. Okay, Apple, Microsoft. Okay, Microsoft is clearing that upper channel line. You see that? Okay, so I'm going to buy some Microsoft. I'm going to go out toward the end of the year. Microsoft. So theta will be less of a concern for me. Microsoft, trade, Microsoft, MSFT. All right, Microsoft. Okay, let me go out to January, see if there's anybody out there. Okay, open interest, a lot at 420. Okay, I'm gonna buy a vertical 420, 430. All right, so it's $4.60. All right, Microsoft. Those are going for $76. Microsoft, the 420 for January, December. Sorry, December. Okay, I'll scale into this. Okay, Microsoft, I bought 5 of those. Microsoft, I just bought some December. Okay. 420, 430s. 420, 430, call. Klarna, KLAR. It's been seeing that advertised a lot. KLAR. Okay, that's trying to break out. Yeah, Mr. or Mrs. Kurtz, let's see, Nokia. Yeah, I'm long the 13 call. I'm long the 13 call. A little drop there, so you have a better entry. If you didn't buy until today, it could hold on to the 90. I'd wait a little while today. Maybe put a limit order in a little bit below where it's bid right now. If you get filled, it won't be too bad. Let's see, Nokia, and we need to look at what's actually moving the market. Nokia is continuing to show weakness. Okay, Dexcom was up this morning. Dexcom Okay, that's still in the descending pattern. Needs to break the downtrend like Oracle did back in April, second week of April. Oracle broke a downtrend. Oracle. Okay, stocks are just. I wouldn't expect much movement today. If anything, you're going to get some stocks pulling back. Micron gap down. Oracle. Oracle inside day. So at least it's an inside day and not a gap down. Palantir looking for a bounce. Okay, Apple starting to move. Microsoft. Um, I would look at next week. Today, big May OPEX. I'd wait for next week to see. Yeah, I'd wait for. We're going to have a big OPEX today, right? So I'd be if you're thinking about a new position. There's no hurry. There's no hurry. I'm scaling into Microsoft. That's the only thing I've done so far. There's no hurry. OPEX most likely will take 2 or 3 days, maybe into Wednesday before we start to see how this shapes up. Okay. So if we look into the future, looking at how institutions are positioning into the future. All right, let's go see what that looks like. We'll go into next Friday. Okay, you can see how there's a lot of color in here. Okay, 0 day. Off to the right, you don't see much color at all. Let me just boost the color here a little bit. Okay, so you can see a little bit. See all this purple down here? 7,400. That's support. So they're selling puts down there and buying calls. Okay, this positive gamma going out into next Friday is supportive. Now, anything right around 7,500, you can see into next Friday is very volatile. Okay, so we want to see more. See how purple this is right here? We want to see more purple like that building to the right as we proceed. Monday, Tuesday, Wednesday, Thursday. Monday, Tuesday, Thursday, Wednesday. That's the Godfather part two. Okay, Microsoft starting to move a bit. Microsoft. Okay, let me post a few things um, on stock charts, stock twits, rather. See if anybody wants to join us. Help bid this. Help the bid. Okay, I have longer dated calls that I have in Microsoft as well. I added some December's a few minutes ago. Just posted in the trading room. Okay. Hackman. And what is the? Let me see what the call wall looks like. Money Magic's call walls. Okay. Let's go see Money Magic, Microsoft, Money Magic. If you're not using Money Magic updates channel, you're missing out. Okay, we got Nvidia earnings next week. Some of these people probably getting out of the way before next week. 410, 415. All right, so we're above. Okay, we're above the 415 call wall, Microsoft. Okay, you know what to do. Microsoft 415 call wall. Okay, Microsoft looks like it's going to be a winner in the short term. Okay. Okay, Microsoft above the 415 call wall. You know what the deal is there. Uh, okay, Apple. All right, Amazon bouncing. Okay, Microsoft's kind of stalling. We're above 415 call wall. Dealers get squeezed as people buy more options at the 415 strike or lower in the money. That causes the dealers to buy shares to hedge their positions. If the markets continue to move higher, dealers will buy more shares, which causes a loop, a feedback loop. Dealers buy more shares, people see it, they buy more calls, the dealer has to buy more shares, and so on. So we'll see if that happens today. We're sitting right underneath the 21 day and previous pivots. Okay, we got this pivot right. Let me just use this to point. Okay, we're at the 21 day right there. We got this pivot right here, this and these pivots right along this line. All right, so I'm going to move this from a channel down to a horizontal. Okay. All right, where that director bought at what was it? 397, I think it was. 397, which is right in here. 397. That's the 50 day. All right, so they bought at the 50 day. Is that right? 397. Is that what I posted? Just double checking what I posted. The director bought, what did they buy? $397. Okay, 397 equates to the 200 day. Okay, Microsoft continues to climb now. Okay, so you can see I just posted on StockTwits. Got about, I don't know, I got it's about 60,000 followers, if that's correct. Um, so, we get in before I post. Um, and looking for this to follow through. But a lot of people will be looking for reasons to buy something that they're already interested in, like Microsoft. So this is starting to move higher. So a lot of people most likely are watching this, just feeding information so people understand that what happens when you get above the 415 call wall would have a very positive impact on Microsoft. Right now, Microsoft continues to rally. And we got Bill Ackman to thank, along with Pershing Square and Michael Burry, among others, which I posted in the room. Thanks to Joel for bringing that to my attention. Teamwork, as always. All right. A lot of people look. My impression is that a lot of people, a lot of new investors got nervous about the morning drop. Might have taken some profits off. They take it most new traders take it literally. That if you're below your stop, take it off. They may not see a potential for a reversal, and they get stopped out. They give their shares away. They hit their stops, and prices move back up. The typical I hate to use the word typical. The liquidity grab that institutions go after a lot of times, they looking for shares or whatever. Microsoft already beat that to death now. Let's take a look at a few other names. Microsoft's still moving. Okay, Microsoft looking good. Okay, 1 minute chart, Microsoft. Okay, we're starting to make higher highs, higher lows. Okay, looks good. Okay, let's look at a few other names that are moving, like Team Atlassian. Okay, that's looking pretty good. Um, Team, nice 1 minute chart. Let's see what the daily looks like. Daily, 60 minute, and daily all bullish. Trending. Okay, Team Atlassian. Okay, I believe they're out of Australia, right? Okay, let's look at the 60 minute. Okay, we're above the 20 EMA. All right, so this is just getting started. Okay, Workday. Workday, we've been watching that one. That's a sideways range. This is 60 minute. So when I see this, I steer clear. I'm not really interested in trading ranges. You could sell premium above and below. That's not a bad idea, actually. Workday. Um, Thomson Reuters, TRI. That's in the toilet. Okay. Adobe, ADBE. Okay, Adobe. Turning back up. Zscaler. Bought some Zscaler yesterday. What did I buy? Zscaler. Let me just check here. Zscaler. I took a few minutes and analyzed Zscaler. It has earnings coming up. Zscaler. Let's take a look at it. It was lagging compared to other security stocks. Zscaler missed last time. They report next week. No, 2 weeks from now, right? Tuesday, 26, 11 days from now. 26 is Tuesday, 2 weeks from now. Or 7 trading days. 7 trading days, May 26th. Okay, Zscaler. Okay, so earnings growth 24%, revenue growth 25%. But what caught my attention was that Zscaler. It's a higher risk, higher reward. Okay, so volume is coming in. What I liked about this is check out CrowdStrike, and Palo Alto. Okay, so Zscaler bought the 160-170 call spread. All right, Zscaler, I might get out of that actually. Zscaler, it's up nicely. Let that go a little bit more. Let's see what we can get out of it by the end of the day. Got all of next week. Okay, 160. All right, we're closing in on 160 already. Zscaler. Okay, Zscaler. Okay. CrowdStrike. Okay, if it does anything like that, would be really good. CrowdStrike had a really bad go of it a couple of years ago in August. I guess it was somewhere around August, a couple of years ago during my birthday, or right after it. I forget what. I think it was right after my birthday. I went down to visit my mom, and they had this big problem. Delta had like, if you ever been to Delta's Atlanta hub, oh my gosh, that place is it's bad enough on a regular day, much less um, the systems go down thanks to CrowdStrike. So that got a hit back 2 years ago. Now it's doing very well. Bought Zscaler. Uh, All right, so C scalar. All right. Apple's still going here. Apple. Okay, looking better. Apple. 1 minute chart. What did they do? It got oversold right near the close yesterday by the open. We were oversold, making higher highs and higher lows. That 1 minute chart, it's a moneymaker. I would say about 90% of the time these work out very well, especially if the stock is in a bullish trend, like my Apple's in a bullish trend. Pretty obvious. Okay, what's stochastic saying? Stochastic's embedded, still flat. It's not turned down dramatically like it was a few weeks ago over here. So what does that tell me, Vinny? It tells me that dips should get bought. Okay, intraday ranges are, so that's the low of the day. It's probably going to close in the upper half of the daily range. Does it take out 300? Pretty good shot that it does. Microsoft still dealing with 418. Microsoft dealing with 418. Okay. Okay. Futures turning back up. S&P futures turning back up. Let's see what hedge flows look like. Okay, this looks pretty good for oversold. All right, I might buy some S&P actually. S&P, I'll do a spread. S&P. All right, we're on the move. S&P. Let's see what hedge flows look like before I do anything. Okay. All right, hedge flows turning up. All right, so let me try this. I'm not gonna take today's. I'm gonna take Mondays. Okay, I've been doing that lately. Been taking a day later, give myself a little bit more room if I need to adjust the position. Okay, so what do we say? This is we're through support, through a resistance now. Immediate resistance right there. Okay, so I'm gonna do something ridiculous. Let me do 7450, 7500, something like that. Buy vertical 7450. What would that net me? Um, 75, 74, 7450, 7450. Okay, 7450 is a 47 delta. Hmm. Okay, that I canceled that order. Let's see. Trade. Let me see what today's calls look like. If this gets a nice run up and we to close this. All right. Hedge flows turning up. Should I just take some lottos? Let's see. I could do SPY too. All right, markets continue to move higher. call wall is 7,500. We're back above this support level. Let me just see what the 0-day looks like. 0-day. All right, that continues to climb. All right, Microsoft. S&P. This looks really good, S&P. Can we get back to 7,500? I bought some lottos. I bought some 7,500 lottos. Zero DTE. Nice, Nick. Nice. Okay. All right. Microsoft breaking out. Microsoft breaking out. Dealers squeezing Microsoft above 415. Okay, there goes Microsoft. Microsoft breaking to a new high. Okay, looks good. Okay. S&P. Let's keep an eye on the S&P if it retraces all of this. Okay, AAOI popping up, AAOI. New York banks are still mixed. It'd be nice to see NVIDIA pop up. Apple's still pushing up here. Apple. Nokia off today. Okay, hedge flows continue to, looks like we're going to start trending. There's a possibility we trend back up into that gap. Futures, watching futures. Microsoft. Friday OPEX. All right, S&P is starting to see a little profit taking there on that little run up. Baker Hughes. Nokia. Zscaler. What are these doing? Zscaler. Okay. Nokia dropped off, bouncing now. Nokia. GLW. All right, the infrastructure AAOI. Okay. LITE. Okay, let's see what's working. Dow Jones, Cisco, back up to 118, Cisco, 3M, McDonald's, Coca-Cola, some defensive names, travelers. All right, let's see. Let's go here and check out. Okay, mostly a lot of red on the screen. Individual stocks, some of these individuals like Apple and Microsoft. Nvidia is down, Microsoft is up. Firefly, looking for that to follow through. Cerebras did bounce, shook out some people, I guess. Cerebras is back to 297. It made it down to 270, 275 and change, somewhere around there. Okay, so we're not moving much here. Microsoft, Qualcomm. All right, Qualcomm actually showing a little bounce here. Qualcomm, Mr. Kurtz. Okay, Qualcomm, Mr. Kurtz or Miss Kurtz. Not sure of your gender, but we have 9 EMA holding prices for Qualcomm. This might base here, could drop off as well. I'm just looking at the RSI, MACD stochastics. Not the best setup right now. Okay, Microsoft. I'm going to keep an eye on Microsoft. This is going to be a trend day, I think. Looks like a trend day. Okay, we're still going here, Microsoft. All right, S&P. Okay, S&P. Microsoft looking good. S&P. Oops. S&P 500. Okay, looking for higher lows, higher highs. Hedge flows, looking for higher highs, higher lows. Microsoft. Okay, there's a lot of cross currents today. C-scaler looking good. Microsoft above the 20 EMA for the first time since a week or so ago. Try to get through that 430 area more or less. Now that we know we've got more company, people in the business obviously be looking at what Bill Ackman did, thinking to themselves, okay, let's analyze a position in Microsoft. So when everyone's bearish, obviously you get people to start coming in, and analysts start to raise their guidance levels, their price targets, in their coverage of I'm not sure what Microsoft's coverage has been like, but I got a feeling it hasn't been really positive. It's kind of like Oracle over the last 9 months or 7 months, 8 months. Oracle, not Oracle. Yeah, Oracle. Yeah, Oracle really screwed up when they talked about how much when they announced how much they were spending. I should say, um, got hit up here. Distribution came in, dropped off, stayed below the 50-day. Now we're above the 50 days, so completely different picture. They addressed all the issues, and now you know what my thinking is on Oracle. That will probably be in the 250s by maybe end of July, something like that. Or Microsoft's still going here. Microsoft looks good. Okay, Microsoft's still pushing. All right, S&P. Microsoft looks good. Okay, Microsoft's still going. All right, so we know what's happening with Microsoft right now. The dealers are being caused to compelled to buy shares. As we rise, more and more people hear about it. StockTwitch starts talking about it. CNBC will mention at some point. More eyes focused on Microsoft. Well, if Ackman is buying, maybe I should buy. That causes more dealer hedging. So the dealer is going to have to roll those calls up plus buy shares because they don't like directional exposure. So that's one way that they hedge. They just buy shares and go with the trend. Creating a squeeze looks good. Yeah, Microsoft looks good. Microsoft. Microsoft going. All right, we're getting squeezed here. Microsoft is running. Microsoft is running. Skippity doodah. I tell you what, having June, July, August options versus short-term options helps you sleep a little better. Not worried so much about how theta's kicking in when you're 45 days, 60 days out or more. Um, just a FYI. Microsoft, I might buy shares too. What is it? MSFU? MSFU? Yeah, I might buy shares actually. Yeah, Microsoft, MSFU. MSFU. Let me just take a look. I don't want to buy the high of the day, obviously. MSFU. It's going though. MACD's up, RSI's rising. We had muscle in that first move this morning. Microsoft finally getting good. I imagine there's a lot of people out there that are saying to themselves, finally, Microsoft is doing what I've been looking for. Not me, but people in general, investors in general, seeing these bullish moves, hearing more big investors having a reason. This looks like a big head and shoulders too, by the way. Inverted head and shoulders, left shoulder, a deeper head, right shoulder. Okay. Yeah, that looks good. Oh shoot, Microsoft! I bought December 2027. I just noticed. December 2027. Unless I got plenty of time on these. All right, let me buy something a little closer. I have some June positioning as well. Microsoft. Oh, we're getting close to those. All right, Microsoft's still going. All right, Microsoft, I bought some June 430s. Realize this is the high of the day. I'm scaling in, got time. This is still going to keep going. This is going to keep going. MSFT. Okay, Microsoft. Big day for Microsoft. Microsoft. Thank you, Microsoft. Thank you, Bill Ackman. Mm-hmm. Oh, big move there, Microsoft. Big move, Microsoft. All right, so that looks good. All right, Microsoft still moving here. Little profit taking there. Day traders, okay. Big investors are looking for much higher. Okay. MACD, RSI. All right, looking good. Okay. Microsoft's still pushing. We haven't had one of these days in a while. All right, so Cerebrus. All right. So what I was saying before is a lot of people are going to see these stocks moving lower, probably going to take stops off. Cerebrus, I took that yesterday on a whim, coming back to where I sold it. Apple's still pushing here. Apple looking good. Microsoft still going. Okay, Microsoft, nice move on Microsoft. All right. Mhm, mhm. Okay, Apple's still going here. Apple's still going. Lifting a bit more. 301 Apple. Apple. $300 and $350. Okay, Apple. Microsoft, a little fade from the high. Be adding to that in the near future. Apple. Okay, Palantir. All right, what else is going on? Kind of focused entirely on Microsoft this morning. Doing lots of research on that one. Building a position. Team at Lazian. Okay, nice bounce. Team looks good. That's probably going to keep going. Let's see what kind of earnings Team has. Team, TEAM. Might want to do something there. Okay, so July 30th, next earnings, IT service management, work management, software. Okay, at Lazian team, 127% earnings growth. More importantly, 31% revenue growth. Those are good numbers. If you like companies like this. Okay. Okay, recognized leader in software development, work management, enterprise service management, software. Okay, they are based, aren't they based in Australia? Um, San Francisco. Okay. I thought they had offices in, I don't know why, I thought they had offices in Australia. Gross profit. Okay. That looks pretty good. I like it. I might buy some Atlassian actually. I might buy some team. Okay. It's a good level. Stop underneath 78. All right. I'm going to do that actually. We'll do it right now. I've already done one at the high of the day. Microsoft. I don't like to do that generally. Microsoft feels pretty hot though. Okay, Atlassian, we're at the high. All right, if this drifts a little bit lower, let me create an alert for team. TEAM. Okay. Okay. All right, I just added alert for team. If it dips into today's price action at all, I'll be looking to buy some team. If it dips a little bit, should close in the upper half of the daily range. Mm. Oracle. Okay, inside day looking really good. Oracle. All right, so recovering a little bit. All right, let's see where we go with this. S&P. Let me just take a look at Trace real quick. All right, so making a series of higher lows and higher highs. Let's go to the 15-minute. Okay, 5-minute. Okay, so not not the best setup on the S&P, only because it's not trending. It's you got to get really good entries and make sure you use a stop. If this does turn back up, that would be good. We're right at this level here, 74.30. Okay. Um, yeah, not the best setup. Oracle. Mm-hmm. Okay, gotta hear this.
These rules and regulations every day. Is it okay for a sitting president to be making active investments, buys and sells in companies that his policy have a direct effect on?
Well, technically, no, we don't think it does. There are criminal conflict of interest laws. There are, all kinds of other, basic.
Oh, that's Bill Allison. I thought it was Ellison.
To prevent this kind of thing, but a lot of them don't apply to the president the same way they do to other officials. Generally speaking, presidents have followed these rules.
Team Atlassian. Okay, I really like what's going on here. Team Atlassian. Team. Let's see what the options are pricing in. Team. Okay, looks like this could be a big day for Team. What's the ATR? Team. Okay, Team Atlassian. TEAM. Still trending. Team ATR on Team is $6. We're up $5, so it's probably not, unless it's an expansion day. You got a 3-candle reversal at the 21 day. Looks good for Team. I'm not going to buy it. I'll buy it next week. I think it was Microsoft. Looking good, Microsoft. Okay.
All right, Bill, thank you very much for joining us on that.
Yeah, they could flip it.
Bill Allison. Let's get a check on your equity market as we head to the end of the hour. We are still down this morning. Some of the AI euphoria back thanks to higher bond yields, so we're not even down 1%. Yields, though, are up almost 9 basis points. We are at 456.95. What are you laughing at?
It wasn't a laugh. It's just a pretty shocking move, right? We for so long heard that if we go up over 450, that breaks something.
Yeah, but Lori Calvasine now says it's 5%.
Yeah, no, everyone's saying 5, and when we get there, they're gonna say,
it's 5.5.
Everyone's like, you know what? In the 90s, my parents paid 14% on the mortgage. Like, okay. It's a big move, and it's fast. Coming up on Monday, Satara Sundar joins us from JP Morgan. Ramaco Resources CEO Randall.
Apple at the high of the day. Apple.
That's 7.5 million workflows every hour. Roughly 200.
Looks good.
Wait, you're doing the arithmetic out loud again.
How else am I supposed to do it?
Calculator, pencil.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
What happens when you grind harder every minute, every hour of every day? You get to build your dream from the ground up. We put everything we have into designing the best jewelry out there. 2 million customers later, and we're worn by the top artists on every stage, the best players in the NFL, the NBA, and everyone who strives to level up their game.
What if you're sick at home or traveling and can't get medical help or prescriptions? Doctors say a medical emergency kit is the answer. Joining me is Dr. Drew.
Thank you. And yes, these kits put you in charge of your health. They come with physician-prescribed medication to treat multiple common and some.
All right. Apple. Woo, look at Apple go. This market is insane. Holy crap. I don't know how many more days we're going to get like this before we get a nice little pullback. Microsoft, adding to Microsoft looks like it was a great idea because this just keeps going. Big day today. Okay, I'm gonna have to roll these things up. I have to roll these positions up here. Okay, Zscaler. Tesla's not helping. Neither is Nvidia. Microsoft and Apple, that's 13% of the weight. At least it used to be 13% of the weight. I'm not sure what it is now. 13% of the weight of the S&P 500. It's an Apple and Microsoft. Both of those are at the highs of the day and pressing. Meta is higher. Let's see what Meta looks like. Meta was trying to break out of this range. It got rejected at the 50-day. Bitcoin, big disappointment. Bitcoin, I thought it was going to get through the 200-day. Got whacked. Bitcoin got whacked big time. Look at that daily candle over there on the right. Completely obliterating yesterday's range. Now, if this bounces and goes right back through the 200-day, that'd be great. But I don't see it happening. This is complete rejection. It's on lower volume though. That's one thing. It's on lower volume. Maybe they're shaking the tree. Okay. So you'll make sure you have enough time on any options you might have. Bitcoin, look at that candle. Daily candle on the right. Okay. Microsoft. Okay. Very nice move on Microsoft. Apple's still going.
I have that check in on them. We're currently seeing the NASDAQ 100. Actually, I think it's worse since March the 27th at the moment, Ed. We're up by 1.3%. Look, over the course of the week, it's not nearly so ugly. We're actually only down about
Meta, Google, Amazon. All right, so these are working. Can Amazon go a little more?
This is the day in which we digest what happened over in Beijing.
Yes, and that is reflected in semiconductors in part. So the Philadelphia Semiconductor Index, or SOX, is the main gauge of chip makers, chip equipment makers. It's down almost 4%. You have to take into account the astonishing rally in chip stocks year to date, 70% or something prior to yesterday's close. Nvidia at one point in the session, its off-session lows, was down on track for its biggest decline since February.
Netflix fading from the high this morning.
Because the market's digesting what was the net outcome.
Okay, Apple's still going here. Apple got some news. We got news here. What's going on with Apple? Tigris Financial keeps Apple at strong buy and raises its price target at $375 from $305, $70 increase. Yep, we can add. OpenAI and Apple's 2-year partnership is strained. Okay, we know about that from yesterday. Corporate travel backdrop seen improving. What does that have to do with Apple? Corporate travel. Okay, whatever. Apple looking pretty good. Apple. What's ARM doing? ARM down 7%. Looked really good yesterday. ARM Holdings dropping. Yeah, I can't add to these. I can't add to my semis that are way up at the highs, even though we have a catalyst for next week. Could go either way. So taking profits off into strength, a good idea. Many of you thanking your decision to exit a lot of positions yesterday. I know Mondo mentioned it. A short-term trading account. Okay, this dip given opportunity. But anything semiconductor, I'm looking to reduce my exposure. Almost bought ARM yesterday, and that pulled back. He's talking really loud there. Okay. Apple's still going here. Apple is really on the move, hey? Amazon turning. Okay, Amazon turning up. Okay, let me take a couple minute break. I'll be right back.
investments here in the U.S. are launching an incredible growth rate for us on our soil here in this country. And we're going to need another 150,000 or so people in this work environment. So we're going to programs all over the country.
Away from the geopolitics, the news highlights just capacity requirements, right? So one thing that's highlights really good at is the brutal economics of semiconductor manufacturing, and talent is a key component of that. There's all this plan on paper to build more fabs, have more foundry capacity in the United States. So we have the people with the skills to make them run, and not just make them run, make them hum, right? Brutal economics.
Yes, I mean, I think that's what we're all trying to work towards, absolutely. We didn't have as many programs established in the U.S. anymore because we weren't manufacturing here. With the investments that are happening here, programs are launching all over the country. In fact, under the CHIPS investment, there's a $200 million workforce.
This is the CHIPS Act. It's a result of the CHIPS Act, yeah.
As a result of the CHIPS Act, there is a $200 million investment in workforce through the National Science Foundation in concert with the Department of Commerce to invest in building a national infrastructure around workforce development so that we can fund regional nodes around the country to build what's needed regionally in workforce and how to feed that into a national infrastructure.
Can I just jump in and ask? I mean, Tim Cook very famously said, didn't he, that China could fill a sports stadium with tooling engineers and that type of talent. In America, we struggle to fill a meeting room. What kind of roles are we talking about this year, that you're trying to skill up this nation on?
Yeah, I mean, I think we need everything across the industry, from technicians and operators to fill the fabs, to be on the fab floors, to all sorts of engineers across electrical engineering, mechanical engineering, chemical engineering, to our researchers, our PhDs. We need everybody. We need marketing talent. We need finance talent. So I think the challenge right now in the U.S. is actually the image and awareness of our industry to students. So we do a lot of work in the space of getting students excited or passionate about this industry, or even to know it. Because kids walk around all day, every day, with their phones, their iPads, their computers. We're in cars that are driven through the chips. We are using appliances. Everything we do is all day long, and most people don't know that. Parents don't know that. So it's an educating country.
What's been so interesting is the method by which we start to our publication footprint. Now, in some ways, it's about leads, intel into local players, but a lot of it's been about drawing TSMC and saying, please, build here in Arizona. How much in the past have we relied on some TSMC talent coming here? Is that a way that's been reskilled and learned from others, or is it really about teaching in our own education system, seeing others being brought up through the STEM education perspective rather than learning from talent?
There's certainly been a mix of both. I think we have, of course, relied on talent abroad. As an industry, it is a really intense, intricate, complicated industry. We need talent from everywhere, like that's clear. What we're trying to do now is make sure we can build the workforce in the U.S. with U.S. citizens, to get U.S. jobs, and fill all of these roles. So we are still learning, of course. We're all learning from each other. We all have different strengths across the world. So, hopefully we'll be able to meet those needs here in the U.S. with all the programs that are being established.
We're out of time, but actually, Cara, I think you think about that, right? What did not come out of the meeting again between the two presidents? Probably the issue of visas. Foreign talent here in Silicon Valley, San Francisco. How long has that been a story? Talent from China coming to universities.
Particularly in the world of AI.
Particularly in the world of AI. Sharon, it's great to have you on Bloomberg Tech. Thank you very much. Listen, guys, tune in Monday for an exclusive interview with the CEOs of Dell and NVIDIA from the sidelines of Dell Technologies World. We'll be journeying over to Las Vegas for what could not be a more timely conversation. Coming up, Cerebras surges in its trading debut, turning some of Silicon Valley's earliest backers into billion-dollar winners. That's next. Bloomberg Tech.
No ITX.
But one of the things that really struck with is how focused you are on the customer.
The more data you have, the better service you can give to the client in terms of the new best product. It's helping us analyze the data in the best possible way.
What I like that.
Better of the same. It's not more of the same. It's better of the same.
How do beverage producers go from vendor stretch goals to operational didn't just get out of jam, they took over complete control of the game.
Fidelity active ETFs can shift with the markets, explore new opportunities, and adapt to risk, all with upside outperformance. Take a more active approach with Fidelity active ETFs.
Thanks for watching.
Connect us to what's important. A dedicated Fidelity advisor can help you open those doors. Backed by a team of specialists, your advisor helps you build a tax-smart investment strategy, identifying opportunities to ensure higher equity value. And when life's life can change too, because doors are meant to be open.
Market volatility can make your clients' retirement planning quite a ride. Our Shield Level Annuities product suite delivers a level of downside protection and provides growth opportunities in up markets by tracking the performance of market indices. Talk to your Bright House financial wholesaler today.
I'm Jennifer Thomas.
IRT.
To highlight
TGIF.
it's Bloomberg.
That's KPay.
VOT.
We've got to check in on Cerebras. What a debut yesterday. Extraordinary 68% higher close at 1.89%. Unsurprisingly, it was with profit-taking company today, followed by some 4.8% less quit on the day as we see the rest of the industry being under some pressure across the AI ownership spectrum because of concerns about really where the US-China relationship goes. But three of the chip makers earlier venture capital backers obviously have said benchmark picks Foundation Capital, they're poised to keep billions from their bets already scored society at the
TRT.
at least in some of the about currency. So how early do they back this company and what sort of rewards do they give its MLPs?
Yeah, so three of the four biggest backers in Cerebras, the biggest outside backers, came in a decade ago in 2016. They invested in Cerebras' earliest round on the order of $25 million, and they now stand to make billions of dollars in marginal anecdote. Benchmark is among the two firms with the biggest stake, now at 8%, and this would have been
TRT.
its first hardware
FXL.
investment
NXT.
over a decade at the time, and that big swing really paid off for them in spades. Obviously, the stock trading up massively from its IPO price of $185 per share.
Rebecca, I don't know if you noticed yesterday, but when Andrew Feldman, the Cerebras CEO, was on the show,
VOT.
Lior Susan, the CEO of Venture Firm Eclipse, was hanging over his right shoulder. Every couple of seconds, gave a little cheeky glance down into the camera lens. Eclipse, another firm, regulars on this show that made
FXL.
a lot of money here. It's really fun reporting on this with you. It's like, it's a really important IPO day. Look, what else do we need to know? And just reflect what your week was like covering this blockbuster listing.
Absolutely. So we also learned in the days leading up to the IPO that semiconductor company ARM and its majority backer SoftBank had made an attempt to acquire Cerebras in the weeks before its listing. Those offers were ultimately rebuffed. But there is huge competition in this market. There's obviously tons of interest in the private markets and now public markets as well. In AI chip companies and AI infrastructure, Eclipse and Foundation Capital, one of the other largest Cerebras backers, this sort of hardware, this infrastructure is very much their bread and butter. And so they've got some of the names in the pipeline that follow this general theme. And certainly there are more investments being made all across stages in the private markets, very much in line with this theme. So we certainly see much more.
NXT.
Big week. Thank you very much. The excitement around Cerebras is day
TRT.
to the massive AI spending that's still ongoing in the
IRT.
hyperscale investors increasingly focused.
EII is only less than a minute.
Meta and Amazon justify the soaring CapEx. We'll see revenue growth on the other side. Let's get more on that with Eric Sheridan, Goldman Sachs co-business unit leader of the technology, media, and telecommunications group in global investment.
Apple continues to move. Starting to see a little bit of action in Amazon and Google. Meta's trying to push the high. Microsoft flagging at the highs right now. Microsoft.
Well, I think the main thing for us is that we remain in an infrastructure-led cycle.
Apple. Apple's still going here. What's the ATR? It's got to be 100, more than 100% of its ATR. Apple. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, the 15th of May. OPEX. All right, so $6 and change for Apple. It's up $4, so you can see another $2 on Apple. Apple, you can see its ATR is $6.17. Okay, it's running hot, but it's only $2 off its ATR. Now it dipped into yesterday's price action, so you could basically say we're at 100% right now because some of that move was from below yesterday into yesterday's price action. So it looks pretty good. Apple, I wouldn't chase it up here. Gonna be good next week probably. Okay, Team Atlassian, we talked about that, right? Team. Okay, is that off the high of the day or not? Team still going? All right, looks like they keep buying here. Team. Nokia Z-Scaler. Let's see what Z-Scaler looks like. Z-Scaler. Z-Scaler trying to break out. 161, 162 is the next level. Another 2 or 3 points. Apple is going vertical here. Looking good. Apple looking good. Nike, double bottom. All right, Microsoft turning back up. All right, we're gonna run again. Apple, I don't know. I can't help but think that today's the day to take some profits off. Not Microsoft, but Apple. These two, I don't know. They could probably weather the storm, maybe pull back a little bit next week. I don't know. You got to let these winners run, though. NVIDIA is starting to turn. All right, so if you like NVIDIA for the earnings next week, NVIDIA giving you a dip. Okay, NVIDIA is giving you a dip. Okay, here we go. NVIDIA is turning off of or sold, higher low. Okay, I'm going to try some NVIDIA for a day trade here. Let's see where they go with this. NVIDIA. Let me see what today's options look like. NVIDIA. Okay, can we make it to 230? If so, maybe in the money options. Okay. The 50 deltas are $1.34, 227.50. Okay. Looking for NVIDIA to run here. All right, I bought some 227.50s. I'll give it $1 stop. Today's NVIDIA. Okay. NVIDIA, higher low. Looking for NVIDIA to turn here. Okay. Stop. Stop underneath this low. Stop. RSI rising. Okay, imagine people going to buy this. I imagine people going to buy this. Yeah. Yeah. Option. Okay, optional talking about Snowflake too, I guess. NVIDIA, can you get going? Giddy up. Okay, NVIDIA, as you know, it's got this big base that we're dealing with. Okay, the longer the base, the higher in space. Okay, NVIDIA looking for a push higher. Okay, Microsoft flagging out at the high. NVIDIA. Microsoft. NVIDIA. Okay, watching NVIDIA now. NVIDIA bought a few 0-day. We'll see what this does in the next hour or so. NVIDIA. S&P just sitting here, not moving. All right, NVIDIA, can you run this up, NVIDIA? NVIDIA. Apple at the high of the day. Microsoft just below the high of the day, just flagging at the moment. Microsoft.
Low tick alert minus 800.
All right, low tick alert. Okay, ARM Holdings. Looks like that's going to bounce. ARM. All right, let me take a look at ARM Holdings. ARM. What are they doing here? ARM. Okay, back to NVIDIA. NVIDIA looking for this to rise. Get something going. NVIDIA. Okay, we got this little pivot over here, 228.50-ish. Got to deal with. Okay, that looks good though. NVIDIA looks good. Okay. I got to mute you guys for a sec. Okay, Apple, Nvidia, Microsoft starting to dip a little bit. Microsoft. All right, Nvidia pushing a bit more. Nvidia. Nvidia looking for a pop through this area, looking for volume to pick up. Microsoft pulling back a bit more. Microsoft drifting a bit lower. Watch Microsoft if you took it earlier. Day traders taking some profits off on Microsoft. Okay, Nvidia popping through resistance. Nvidia popping through resistance right here. Excuse me. Okay, we're starting to pop through resistance here. All right, Nvidia's starting to get some. Okay, more day traders. Nvidia might pile in. Watch volume. 1, 3. All right, here we go. Starting to go. Nvidia's starting to go. All right, man, that'd be nice to get a bullish engulfing candle. I don't think we're going to get that, but it'd be kind of cool. That'd be really cool. Okay, there you go. There you go. Okay, looks good. What's up, Goose? Hey, baby, you came to visit me? I love it when you come to visit me. There you go. Okay, let me All right. Oh, NVIDIA. Okay, a little pop through there. Let's see if we can follow through on this. NVIDIA. NVIDIA is still climbing. Let's see if we can push off of this level. Okay, ARM holdings turning back up. ARM turning back up.
Low tick alert -800.
Okay, no follow through. No follow through. S&P is starting to pull back. All right, took a little took a little bit of the NVIDIA scalp off. All right, watching for more upside. 272, what was it? NVIDIA, where are you, NVIDIA? There you are. 227.50s. 227.50s. Okay, let's see if these go some more. Okay, 227.50s. NVIDIA. Watching NVIDIA closely. Netflix. Just can't get out of its own way. Netflix. Microsoft's still fading a bit. Mm-hmm. Okay, ARM Holdings trying to turn up. ARM. Let's see what ARM is doing. Army. See if we can't get something going here. It's a slow Friday. I'm your host, Cousin Vinny, coming to you from the closingprint.com. Futures just kind of sitting here doing nothing. Okay, let me zoom out a little bit here. Okay. You can see just hanging out in between these two areas of positive gamma above and below. We're trying to make higher highs and higher lows. Okay. If we get anything going, we'll see it pretty quickly. Amazon, no follow through. Microsoft fading off the high, so the buyers dissipating. Let's see if we get B and C pivots later. NVIDIA. IONQ turning the corner. Up down volume. Up down volume's 2-1 still. Not too bad. 3-1 down volume on the New York Stock Exchange. When in doubt, always check the New York Stock Exchange, NYSE. New York Stock Exchange. Okay, I got to go check something real quick. I'll be right back. All right, so New York Stock Exchange showing a bit of a warning. Currently 3-to-1 down volume. Did we get a bounce? I don't know. You're not going to get many more chances, I don't think, for taking some profits off the table. VIX I bought yesterday. I bought the 22 call for June. As a hedge, I'll start adding to that if we start to roll over. Apple's starting to roll over a little bit. Apple. Netflix still drifting lower. New York Fangs are mixed at the moment. New York Fangs are mixed. Okay, warning signal. All right, do we bounce again today? Like we did on Tuesday? Okay, 9 EMA is way up there. 9 EMA. All right, 9 EMA is here. 21 day. 200 day. 50 day is about to cross over. New York Fang. All right, so we'll get a crossover in the short term if this doesn't roll over. 50 day starting to show signs of fading. Stochastic starting to fade a little bit. Embedded closes in the upper half of the daily range as long as it stays up here above 80. Okay, watching Netflix for another scalp on this one. If it gets a bounce. Okay, so now we got these pivot high from the open, and this pivot high. We got pivot lows. Okay, looks like a triangle pattern. Okay, watching NVIDIA. ARM holdings, no follow through yet. ARM holdings. Okay, this feels like the volume has come out of the markets. NVIDIA. Okay, MACD, RSI, drifting low. We might get another opportunity on this one for a scalp. NVIDIA, watching NVIDIA for a scalp. Okay, what's GLW doing? GLW. Okay. All right, Zscaler, we got earnings next week. Zscaler, all right, that might get going. Watch that lower Bollinger Band opening up. RSI rising. Zscaler might get going. Palo Alto and CrowdStrike have been very active. CrowdStrike and Palo Alto. So there's definitely interest in the area. Zscaler, not sure exactly why they're off as much as they are. Okay, IGV software. IGV software. Let's see what that looks like. IGV with Microsoft turning up. That's good. So IGV should start to track higher. NVIDIA. NVIDIA. All right, looks like the markets are just taking a break, going into the lunch hour. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, the 15th. Hope everyone's having a good day. Okay, looking for BNC pivots this time of day. We might get some opportunities towards the end of the day.
That's right. I think one thing that we learned from closing arguments, it's really relevant to the conversation we just had with Sarah, is that this case for both parties really boils down to credibility. That's the message that they left jurors with on Thursday when they had closing arguments. Musk's attorneys are trying to cast Sam Altman as someone who's deceptive, who's untrustworthy. Meanwhile, lawyers for OpenAI were trying to point to the evidence that's been presented so far in the case, saying Musk's story doesn't add up with what we've seen in the documents and what you've heard from witnesses. And so now it's up to the jury to decide whose version of events they believe about this saga of the formation of OpenAI, the dissolution of this relationship, and the transition into rivalry between Musk and Altman that we see playing out today. What happens if Musk wins? That's a good question. So at this point, the jury is going to start deliberating, and they're going to issue a verdict that's advisory. So it's a non-binding declaration to the judge in this case, who's going to have the final say on whether or not Musk has done enough to prove his claims here. And Musk is asking for a lot. He's asking for $134 billion in damages that he says he's going to donate to the OpenAI Foundation.
Okay, starting to get a bounce. Might try scalping, adding back a little bit here on NVIDIA. No, not really, right? Watching stochastic and RSI. Could drop a bit more. All right, I'll steer clear. I'll just keep the last half on and see what we do. S&P futures continue to drop off. Let this get oversold again if it can. Okay, let's see what else is going on, huh? All right, let's take a look at the sectors just real quick. XLB, materials losing the 50-day. That's not good. Communications, Meta, Google, Netflix, communications. That's okay. Energy looks better. Financials, flat below the 200-day. XLI industrials fading. What's Caterpillar doing? Caterpillar fading more. Cummins. Okay, these are all fading. GNRC. So we'll get better opportunities on these. They're a bit overbought. XLF, XLI, XLK, Tech, Doji, Semiconductors, Doji, Extended. How many days is this now? 1, 2, 3, 4, 5, 6, 7, 8, 9. $33 days. 33 days. We've been trending for 33 days. Does it consolidate? Got NVIDIA earnings next week. My guess is going to be a little bit of a reset. Everybody's very bullish. Most people are bullish on semis. I just think we're going to have some consolidation. All right, there goes, what is that? That's Robinhood, not following through Robinhood. Okay. Microsoft, Morgan Stanley. Okay, Morgan Stanley. What is Morgan doing? Morgan Stanley. Okay. Morgan Stanley dipped a little bit this morning. Look for this to break out along with Goldman Sachs. Goldman was lower earlier. Buyers stepping up. Buyers keep stepping up. You can see in the previous 4 days, aside from yesterday, look at Monday, Tuesday, Wednesday. Buyers in this area we dipped down into the same area around 940. You know that it takes days and weeks for institutions to pick up shares. I'm not saying that institutions are buying here, but the idea that buying continues into these bullish candles Monday, Tuesday, Wednesday is a good sign. We tried to break out, failed, came back down, but buyers stepped up at the low of the day. So Goldman Sachs, you can see the dip buyers coming in. I like this oversold condition. Whenever you have price action bullish and stochastics is above 80, don't like the way this is turning down, but MACD is flat. Volume looks good over the last week. So maybe something here, give it a little bit more room. Maybe next week we can go. NVIDIA starting to turn up again. NVIDIA. Okay, NVIDIA looks like it might bounce. Okay, NVIDIA. Okay, maybe one more shot at NVIDIA. Day trade. Today's options. 1 day. 0 day. All right, let's see if this goes one more time. NVIDIA. Probably gets rejected at the highs. We'll see what the volume says. RSI turning back up. NVIDIA. So anyway, we were on talking about banks, talking about tech, semiconductors, defensive. That's pulling back in. Utilities, pulling back. Healthcare, pulling back. Wow, everything's pulling back. Looks like we're ready for some consolidation, folks. I hate to be the bearer of bad news, but we've been up for 7 weeks straight. Okay, watching individual names. There are some that day traders are active on. NVIDIA, if anybody has semiconductors, NVIDIA, ARM, looking at those, showing a little bit of strength. NVIDIA earnings next week on Wednesday. Okay. Give it a few minutes to see what NVIDIA does.
There's not going to be any way to cut interest rates in the short run. Now, the question is, does that make a big difference to the economy? No, it probably helps that they just sit there for the time being until they get a better read on how long we're going to have this war-driven inflation. But how's he going to handle the president? That's going to be an issue, and we're going to be interested to see whether or not the president has enough patience to let him get through a couple of meetings. He has meetings on June 17th and July 29th. Maybe by the time we get to September 9th, which is the meeting after that, they'll be able to at least talk about it.
All right, so a lot on the to-do list of the incoming Fed Chair, Kevin Warsh. Michael McKee, thank you so much for setting that up. And of course, we will speak with you again later this hour. I want to bring in now our roundtable to talk macro. Ed Al-Husseini at Columbia Threadneedle Investments and Kay Her of JP Morgan Asset Management. Guys, thank you so much for joining us today. There's so many different places we can start, but I think we've got to start with the action that we're seeing in global bonds today. How would you characterize the rise that we've seen in global bond yields this week? It was fairly steady before really picking up momentum today. And I'll start with you.
Yeah, absolutely. I mean, I think we're tripping some big numbers in terms of the level of these yields. And I think we're starting to see portfolios reposition really kind of based on two factors. One, risk assets continue to do really well. So if you were under risked, you were catching up, and fixed income is starting to drag. And so we're seeing that repositioning show up, particularly in the longer term yields at the moment.
So that's an interesting point. I might have made that point yesterday. When you looked through yesterday, you had S&P 500 up 9% and bond yields kind of flat. And there's been this disconnect that the S&P 500 U.S. equities keep marching higher, and there's this disconnect in the bond market, a little bit more worried about inflation, a little bit more worried about term premium, and the equity market continuing to pace. It feels like things have shifted a bit today, and equities losing a bit of a bid. And it seems like you're more appropriately attired in red today than I am in green, Scarlett. Maybe I'm just optimistic here.
Yeah, and it's across equities, it's across bonds, so across all different asset classes. You could argue, given what we're seeing in the UK and Japan, that the tail is wagging the dog. The dislocations that we're seeing overseas spreading to the US today and intensifying the sell-off. With JGB yields surging, Kay, is global fixed income losing its anchor?
So, gosh, it does feel like the bond vigilantes are back. And so I wouldn't say that we're losing the anchor, but I would say that global term premium is back in focus. And that's exactly right. We had a little bit of a modest sell-off, as you noted and Mike noted. Rates are really back to where they were a year ago. This is not that excessive of a move. We're back to where we were when we had concerns about tariffs on Liberation Day. But what's really happened overnight and into today is real concerns about the UK, about global term premium, et cetera. And I think if you look at the move we've had this morning, it's been more real yield driven, not inflation. Prior to today, the concern has been about the inflation on CPI, PPI. Today, of course, we've got crude gas prices up a little bit higher, but we're not seeing that flow through into inflation expectations. It's more of a global term premium, which one can make an argument here that the U.S. doesn't have to be dragged up to that level.
So I wonder, now that we're seeing not panic, but the concern seep into equities. We have equities lower today, retreating from record highs, but still the direction is down. Ed, are we seeing a repricing of the entire real interest rate environment?
A little bit. I think the picture that's coming into focus for me is one in which monetary policy at the front end is a little bit too relaxed. And we're starting to see that bleed into higher rates across the curve. We're starting to see that bleed into a little bit more inflation compensation further out. That's much more pronounced in places like Europe and the UK for obvious reasons. But the whole complex is lifting higher because central banks haven't really acted. They've created a permission structure for higher rates. They haven't really acted on that yet. And I think we'll see that change in the course of the summer.
Yeah, the betting right now is for higher rates. Traders in the U.S. see 2/3 odds that Fed will hike in December. In Japan, they see the BOJ resuming interest rate increases in June. And of course, in the UK, they see the big Bank of England hiking rather than cutting. Having said all of this, where do you want to be on the curve?
I think the long part of the curve is getting a lot more attractive. So if you're an income-oriented investor, you're looking around, you want to hedge some of that equity risk, you want to hedge some of the credit risk, and both of those asset classes have done extraordinarily well. The long part of the curve is looking much.
If you're thinking about the transformational.
I said, yeah, no, good point, good catch. I said if you zoom out, meaning if you look with a broader lens, longer time horizon than right now. So we've
I
had
still
this.
say you're conflicted though, because I think that's what we are talking about. Like, if you are of a longer time horizon, would you chase of what you term it a chase? What's the difference between a chase and a lean in if your time horizon is long? I don't get that.
No question. But you have people that have the margin all the time, Scott, are either overweight or underweight equities. And you're thinking about what to do with the incremental dollar as it relates to equities. I think the AI infrastructure cycle is real. The earnings are showing up. But the playbook is one that rewards patience and taking advantage of volatility. And when you've had the type of move that we've had, and obviously it's been pretty epic, you have to sit back and see if this change, which showed up in the form of higher rates, a new Fed chair, I think you can stay constructive, but I'm saying be disciplined on how you add. It doesn't mean I'm going in there and selling everything. It doesn't.
No, but I got you. I mean, look, every dip has been bought. And the question is whether, Kev, this is going to be, if this is a dip of anything beyond a day. I mean, if one day doesn't mean anything. If the dip will be bought. Goldman Sachs, their trading desk today, essentially makes the case to just keep holding on, even in the face of parabolic moves, maybe to Jenny's point, some euphoria, some mania. They say it's tempting, but don't fight this. Dips have been extremely shallow because the long-only community has been and will continue to be ready to pounce as buyers.
Not only are they going to pounce as buyers, they're going to pounce on these big five names that are pulling back today. We looked at Micron, and we talked about it last Friday. It's selling off quite a bit. But I think there was 2 days last week where maybe it was up 70 one day, up 100 another day. The dip buyers are going to come back. If we've learned nothing since COVID, it's not to fight the retail tape, and the buyers will come in. And even we're sitting with cash, Scott. If we see a sell-off of any consequence next week, we'll go in and buy for sure.
I mean, there's been some parabolic stuff going on. I mean, we almost made like a scorecard to go through some of it. The SMH has been up for 6 straight weeks. Now, it could snap that this week, but it's been up for 6 straight. If you look at the SMH, you pull it back over that time, it's like up and to the right, like kind of everything is. The DRAM ETF, all right, it began the week with $6.25 billion in assets under management. It finished yesterday at $9.5 billion. All right, it only began trading in early April at a time when some said, you know what, the launch looks like a toppy move. Well, it only had 77 million in AUM a month ago. All right, to $9.5 billion as of yesterday. How about Nvidia? I know it reports next week. We'll talk about that in a minute. 7 straight updates, up 20% over that time alone. I get that there's a lot of optimism. Market cap is now near $6 trillion. How about the NASDAQ 100 ETF, the Qs? Gone up so much, it would need to fall 12.5% just to get back to the 50-day. So that's, Brian, why people look at what's happened in this market and they're like, man, something's got to give.
No, going back to what Rob said, I think what Rob was trying to say is here, just the market, you have to believe the market's going to pull back, and we can't continue on with this pace. It's just not, number one, it's not healthy. Number two, we need to have some more buyers come in. If I could echo something that Kevin said as well, when we talk to our great platform clients at Humulus, all we hear is we have cash, we have cash, we have cash, we want to put it to work. So the retail, the high net worth investor wants to play on this, but even they are not trying to chase this right now today after what's happened this week.
I mean, look at the IPO yesterday. Cerebras goes, up almost 70%. You could probably put that on the sort of parabolic scorecard that we did. Maybe that marked to some a sign of 89% above the IPO price in the debut. Maybe that was a sign of sell the news, at least in the short term for technology. Yeah. You get a cocktail of high oil and high rates, and it just gives you a reason to do that. But
Microsoft,
what do you make of these moves that have been nothing short of parabolic, but juxtaposed against earnings that would, as Tony Pasquarello of Goldman Sachs writes about today, yeah, you can hate on the narrowness of the market and how top heavy it is, but you can't get away from the fact that earnings have matched the movement of what the S&P has done, and the big reason why it's tech earnings were up 50% in a quarter.
Right, wild. So
Cerebus and Intel have been my canaries in the coal mine. You know, and I'm always looking at something that catches my eye and I think is representative of the growth and risk appetite that's out there. So between Cerebus, which made me a joke with a friend this morning, I'm like, you know, makes me want to party like it's 1999. And then I told her it smells like Teen Spirit too. But that's how I feel about Cerebus, which is it gives me flashbacks to the late 90s. It's not. I know it's a totally different playbook, but it reminds you of that. And what Intel's done on like still negative earnings and still very little revenues compared to their bigger peers is kind of wild. So it says to me that there's a fringe element that's out there. And I did a interesting, I thought, at least for me, you probably don't think it's silly, but I did an interesting thing this week where I looked at all the stocks in the S&P 500 with over a 30 times multiple to get a sense of who was really rich. And then I looked at what their expected earnings growth is over the next 3 years to see, is it accelerating to justify those multiples or is it declining? And so what you see is earnings growth rates are actually kind of flat for the richest stocks out there, which is why I don't think there's a huge problem in the rich segment of the market, but there are fringes. And the Intel spooks me. You know, there's nothing behind that other than people playing.
I don't know, other than the United States government, the full faith and credit of the USA, there's nothing behind it.
No, I think there's nothing behind it. I don't think, you know what it's like? It's like how, to some degree, you can joke, haha.
It's true, though.
Sure, but
It
ultimately
is true.
everything's.
Don't fight the White House.
Here's the thing.
It's true.
Okay, you really think that their earnings in the next 5 to 6 years are going to justify that market cap? I don't think so. And when you look at things like,
You think that's the
Cerebus,
narrative, Jenny, that's driving the stock?
obviously it's not, but I
Honestly,
wouldn't want to be buying it here. And you know what, Kevin? You know what? Sorry, Rob. Sorry about that. You know what, Rob? I know you're not buying Intel stock either. There is no way because there's no functional valuation method that would get your company
Let me
or
tell you
your
something,
analyst.
though. If you used to own this name, okay, in your growth
Yeah.
portfolio, right?
Oh, nobody's more. What did they say? Spurned than me.
If you still had it, now you got out because a lot of people were questioning whether this thing was even going to be something that we'd be talking about a year from now. If you still own it, I think we both know you'd be holding it.
Absolutely not. In fact, I'll give you like a little bit of personal. There's no holdings of it at Gilman Hill, but I found it, I'd forgotten, I put it in my kids' UTMA accounts. You know what I did last week? I sold it from my kids' UTMA accounts. It was like 10 shares in each account, so it wasn't significant.
Yeah, that's
but it went
different than
straight in.
having, I don't know.
We own more than 10 shares.
Yeah.
Yeah.
We own,
So what are you doing? Are you holding it here or are you trimming it?
we had covered calls that will expire today, 121 calls. We were on last Friday, Scott. Remember, the stock was 131.
Yeah.
We were in the money. We made a nice profit. Just keep printing option premium against this.
Right. Against.
But I don't think that we want to be sellers here because I don't think the enthusiasm for this trade is over. We saw that yesterday with Cerebus. I mean, anything having to do with this space is going to move higher.
I don't know.
And momentum
I
inflation.
think if there's inflation, these are like these valuations right now, or rather these share prices right now are based on long dated expectations for cash flow, right? Because every stock ultimately trades at the present value of its future cash flows.
You can't discount what Scott said about the U.S. government being not just a shareholder,
Okay,
but
fine.
also an influencer.
Fine, but I just don't think the cash flows are going to get there to justify the current valuation for a very long time. And if we're in an inflationary environment, though that present value shrinks. And so I think there's a lot
I got a
working
good one
against
for
it.
you then. I got a good one for you. What are you doing with Cisco?
Oh, Cisco, we're holding.
Oh, yeah.
Okay, you want to hear why?
Of course you're holding that.
Of course, because here's the valuation on
Because the stock's
Cisco.
coming off the best day since 2011. It's trying for its best week since 2001 on strong AI demand, upgraded to a buy. Now, you could call this an old tech, but now suddenly it's an AI story now, and you have no issue with what this stock has done.
Okay,
or anything
here's
like
why.
that.
Cisco trades at 25 times earnings. Cisco has
That's an
a 4,
above market multiple.
barely. Cisco has a 4% free cash flow yield, which means they're actually cash flow generative. They have earnings, they have free cash flow. It's up 52% year to date. That's a fraction of what Intel's up. I can't even remember. But
Well, if
our
Cisco
thesis-
had backstopped by the government, it'd be up a lot more. It doesn't need
you
it.
don't know how much they're actually going to earn. There's no way to guess. And we also know that the government hasn't exactly been true to everything they've said, hey, we're going to put money into, and it's going to work. Who knows how those earnings are going to play out? There's too much ambiguity. So on Cisco, interestingly, we originally added this in 2013, then again in 2021, and the investment thesis remains the same today. So so you can say it's an AI play, but our thesis has always been
I'm not saying it's an AI play, but that's how the market's taking it as an AI play. Well, the same way they're doing it with IBM.
IBM's down from like 330 to 220. Oh, okay.
I'm in Intel.
No, that's just a euphoric, like, meme thing on Intel. It's not crazy. There's no actual valuation behind it. But I don't think you can compare. Are you just trying to get me going?
No.
You're trying
We should all work, right?
That's why they put me in the hot seat.
There's a little bit of humor on this show from time to time.
Especially
You
brings it.
should join the
What
party.
a joy.
Join the party from time to
The
time.
bottom line is there's real fundamentals. There's a strong foundation in Cisco. There's a strong case, which is wherever technology goes, whatever happens with technology, you need Cisco's products to support that, whether it's AI or something else.
Let's talk about things that, like Rob,
Microsoft.
Okay, Microsoft's been down a bunch. One Bill Ackman, who's Pershing Square, has taken a stake in that company. He says he began building that position in Microsoft in February following the price decline. They were able to establish.
All right, so they've got more conversation about Microsoft here. So
Okay, so that's about where the market is. In our view, investors underestimate the resilience of the M365 franchise. We believe concerns regarding Azure's growth trajectory are similarly, misplaced. What do you think about this?
I think Microsoft's the highest quality tech name in the world. I agree with
Highest
Square. I
quality?
agree with Bill.
Highest?
Yeah, and highest quality.
God, he is
tech name in
so
the world.
friggin' annoying, Wapner.
M365 is endemic in every ecosystem out there. Now they're going through a transition
Ay,
phase
ay, ay.
because of what's happening around them. But if you look,
Microsoft rising back up to the highs.
They're the largest analyst upside in the Mag 7, plus 36% to the median price target. Azure CapEx has been raised to $190 billion. Ackman views the growth in is growth CapEx, not maintenance CapEx. It's
No, he thinks it's going to drive future revenue generation. You're right.
Correct. It's growth. It's growth CapEx, not maintenance CapEx. So what that means is he thinks they're going to monetize, and isn't whether the AI investment is right. It's whether the street is patient enough through the build out. And Ackman, like us, is saying he is. And so I think it's pretty compelling. It's been a large holding for us for a long time. It's tough for us kind of to move away from it because of the embedded gain that we have in it. Obviously, it's been a little more painful here recently, but the pricing has re-rated, and you've historically been rewarded when you're buying in really high quality names at discounted prices that are going through seminal changes in their business. And Azure is still growing at 40%. I mean, this is a good business.
I'm not going to argue with a guy that's got like 8 couches in this shop.
Clearly,
right?
No.
And
He can relax
highest
and think
quality
about
couch game.
He can relax
in the
and think
TV
about his
business.
Microsoft, right?
Seriously, what do you think about this Ackman move and the commentary around it?
I really like it because, we've owned the stock all the way through this spring where Microsoft was kind of baby in the bathwater with all the software stocks. Rob nailed it in terms
There goes Microsoft. Okay.
of the highest quality.
Microsoft getting a jolt. CNBC covering.
And really the earnings discernibility. What we've always looked at Microsoft is that they've really taught the street that they can monetize all these different properties that they brought in and all these different products. So I think it's only a matter of time before they really get this Azure 365 going the way that they want. So we really like it. So let's use that as a segue to get to software real quick before we get out of here, because the IGV's in jeopardy of breaking that 4-week win streak. Right, Kev had this nice ramp back at still what's been a dreadful period for software names. You trimmed IBM, which is down 26% year to date, right? That makes the point of even with some comeback in this space, there are a lot of stocks that are still down a lot as other parts of tech have ripped.
Yeah, a lot of the money we were putting actually into Microsoft over the past month. So that's the first time we've been able to buy it, literally for the past decade. IBM isn't right-sizing or just money.
NVIDIA, crude oil. You're looking at crude oil futures. Okay.
And it was absolutely like Microsoft re-rated with the software again, whatever the cool terminology you want to use. But we sat on this thing for many years where it was kind of in the penalty box. It gave us an amazing run for 2 years. We still own a position, Scott, but I want
Microsoft.
to cash. Very specifically to put to work next week, to your point, we're going to be buyers.
Oh, I thought you were going to say you wanted to free up some cash to put it into Palo Alto, which you did. I thought that's where you were going with that.
Well, we had some extra cash and we made that move simultaneously. What's interesting about Palo Alto is we sat here a month ago and I said the street has this wrong. Like cybersecurity isn't going away. It's not going to be disintermediated. It's not going to be replaced by Anthropic or its applications. If anything, they're going to embrace it. So you can look at CrowdStrike. You can look at Palo Alto. We bought it at 158 on March 5th. We bought it again this week at 220. It's probably approaching 240 at the moment. And this is ahead of earnings next week that we're buying it. I think this is a story that's still in the beginning of having to protect all of the things that AI is doing, not being replaced by it.
Well, up 46% in a month. That was a good call. The target goes to 255 today at RBC. They reiterate their outperform rating. All right, we're going to take a break.
Palo Alto Networks. Yeah, that looks good. Zscaler.
We're going to check on Cerebras' first full day of trading, plus new reports.
Apple turning back up. Okay, Netflix turning. Looks like higher low on NVIDIA. Okay, Microsoft's about to break the high of the day, looks like. Microsoft about to go again. A lot of positive commentary on CNBC. Not that I care, but some of the people that are on there I like. I like Rob Sechin. I like Jenny, Joe T. Rob Sechin. What's the other guy's name? I forget. Bill Belsky. Okay, Microsoft best day in a while. Positive. Brian Belsky, right? Brian Belsky. Microsoft pushing a bit more. NVIDIA turning back up. NVIDIA.
Shares of Cerebras. Obviously, this is the full first day of trade, giving back a bit after that huge debut. Let's get to Christina Partsinevelos, who's got more. As you watched this all day yesterday, certainly
Amazon turning back up. All right.
Oh, yeah, huge day yesterday, so selling off. Also, you're seeing it just part of the broader tech sell-off. But the stock really closed at just so much higher on Thursday after a 68% surge from its IPO price, giving it a market value at one point of over $100 billion on a fully diluted basis, which includes options, warrants, and just other securities. Investors, though, as we know, are just really hungry for AI exposure, and Cerebras has a strong pitch. Its oversized chips run AI models at speed while sidestepping the networking complexity of connecting thousands of high-end NVIDIA processors, since it's all on one particular chip. The valuation, though, is maybe where we start to raise some questions. It's steep. Cerebus is trading at roughly 134 times trailing revenue, more than 5 times NVIDIA's multiple as of yesterday's close. It does have about a 24, almost $25 billion backlog, but 20 billion of that was a single deal with OpenAI, and only roughly about 3.7 billion is expected to be recognized in 2026 and 2027 combined. So that means that they really have to start diversifying, getting more customers in order to, continue that trajectory.
Microsoft breaking out.
Pricing in years of flawless growth, no doubt.
Yep. All right, Christina, thank you. We'll see what the tech trade now does into a new week and where rates go, because that could all be part of the mix. Now we're ready for SpaceX. Let's show you the timeline of what we think is going to happen here, according to CNBC sources. We're anticipating a $70 to $75 billion listing. May 18th to the 22nd, that's next week. You could see the S1. June 8th, you could get the roadshow, and then you get the first trade in mid-June. So we're thinking a lot about that. We're also thinking about, of course, OpenAI and Anthropic. Anthropic, by the way, continues to raise a lot of capital. They're heading towards this monster offering of their own. Their valuation is climbing rapidly, as Kate Rooney's been following as well and joins us now. Hi there.
Hey, Scott. So that's what I'm hearing. Anthropic right now has agreed to a term sheet for a new $30 billion investment. This would value the AI giant at $900 billion in private markets. This is according
All right, NVIDIA climbing. NVIDIA's climbing. You can break out. You can break out above 229 or so.
Papers were not signed yet. It was very much in the works, and I'm told it's getting a lot closer to this getting over the finish line with that term sheet being signed. It more than doubles Anthropic's last price tag, and then notably eclipses the value of rival OpenAI, which is valued around $850 billion in private markets. It does come on the back of explosive revenue growth for this company. Got Claude Code, a major driver of that. There's a lot of intrigue around Mythos, the cybersecurity model that has helped.
Meta's on the move now. Watch Meta. Watch Meta.
At the end of the day, to power all that demand, I'm told that is why they're out there raising capital, continue to fundraise ahead of what we're told could be an IPO as soon as the end of this year. Anthropic has topped, from what I'm hearing,
Okay, Meta.
$5 billion revenue run rate. That is, again, according to sources, that would be up from
Meta breaking out.
early this year. And then it was $9 billion in revenue just at the end of last year. Got Sequoia, I'm hearing, Altimeter.
New high today on Meta. Still 50 days, still a problem.
Participating as well. I'm told we should expect more investors to round out this funding, bring that total to 30 billion. Scott,
a lot of demand still out there. Kate, thank you. It's Kate Rooney. So, Rob, I mean, I believe that you've been giving your investors access to these through private markets. Now, what do you think as you start to get the parade in the public markets?
Certainly been a melt up. I still think there's a lot of individual investor demand that did not get to participate in the private rounds, although they were broadly available for many of them. Some of it came later in the cycle. I think we're pretty
Meta looking pretty good here. Meta.
There's some later rounds that we passed on because I think the upside becomes
Okay, let me see what I do with Meta here.
You pay for these, but you almost have an evangelical style following behind a lot of these names that you're talking about, Scott. And I do think there's probably more runway even after they go public. You will see what we do once that happens for our clients. They're going to be sitting on enormous gains. And my bet is that that's going to weigh into their decision process on what to do from there. But these are businesses that are changing the world. So I think it'll probably still be, even after the IPO, a wait and see approach for most of these businesses.
Belsky, how do you think about this? Because I think, Rob's point is well made, and Brad Gerstner was talking about this yesterday with us as well. The idea that the upside is going to be much less asymmetric, especially for retail investors to consider, because these companies have, in his mind, already IPO'd because they've done what they've done in the private market before they even get public.
Exactly. This is a great example of how the private markets are, especially with something like this and OpenAI and SpaceX, it's very different than what we went through in the late 90s, early 2000s. These companies have revenues, they have a diversified set of investors already, and so you're not really looking for that oomph when they come out again. And I think that given the fact that both OpenAI OpenAI and Anthropic, in their recent discussions in the press, their public comments started to tail back a little bit. They're not, a year ago or 6 months ago, they were really, really bullish in terms of what's happening. They've kind of become a little bit more conservative, which tells us they're getting closer to that.
Okay, futures continue to rise.
You want a piece of any of these?
Apple back, almost back to the high of the day now. Apple, Nvidia lagging, trying to push a little bit higher. Nvidia, Amazon, Google might get something going in the evening session. Microsoft breaking higher. Microsoft. Okay, just a little break there.
Or does it come from within tech? One of the things I'm worried about is compression of valuations.
Yeah.
And so if it flows from existing tech stocks into those because people are already tapped out on their allocation to technology, that could actually be kind of negative for some of their peers. So I'm watching the flows.
Unless there's just so much money sloshing around all over the world that wants exposure here that you're not going to get money like ringing the register on any of the mega cap names to take that and put it in here. There's just a lot of money that's still available to be invested.
It'll just be interesting to see it.
Yeah. Well, you did see it. You saw it yesterday with Cerebras. It was up $185. There's a ton of cash on the side.
But you don't know where it came from.
I think it came from cash. Let me get the headlines from Mackenzie Segalis. Hi there.
Hey, Scott. The DOJ is reportedly planning to indict the former Cuban leader, Raul Castro. That's according to Reuters, which says the potential indictment has yet to be approved by a grand jury, but that it relates to Cuba's downing of humanitarian aircraft in 1996. It follows a visit to Cuba by CIA Director John Ratcliffe yesterday, where he offered assistance to Cuba in exchange for fundamental changes to its political regime.
Okay, Nvidia.
Chancellor Friedrich Merz is escalating his critiques of the Trump administration. He said earlier today that he would not recommend his children live in the U.S. due to the social climate, according to reports. Merz previously said the U.S. was being, quote, humiliated by Iran in war negotiations. And South Carolina's governor calling a special legislative session to redraw the state's congressional districts. The new map would likely eliminate the state's only majority-minority district, currently represented by powerful Democratic lawmaker Jim Clyburn. Scott, back to you.
Okay. Thanks so much for that. Mac, we'll see you in a little bit. All right, coming up, our calls of the day. Several bullish names in the oil space today. You know, oil's on the move. Plus, one firm now positive on Spotify ahead of its investor day next week. We'll debate all of them next.
I see.
Watching Nvidia, looking for a breakout. Nvidia. All right, let's go see what Trace is saying. All right, so we are making higher highs and higher lows. Higher lows, looking for a higher high. Looking for futures to pop a little more. Microsoft, a little selling right there on Microsoft. Microsoft at the high. Microsoft. Not sure what happened there. Okay.
A credit event. The same thing happened in the energy sector in 2014, 2015. Right now, expected capex to cash flow for the communication services sector or a lot of these hyperscalers around 60%, but their underlying businesses are far more resilient, growing far faster than was the case with baby bells in 2000 or the energy sector, which is always extremely volatile. So we have some distance to go. And you also expect to see at that point when you start getting closer.
Apple just off the high. Microsoft, ditto. Nvidia, watching for one of these to go. Okay, Nvidia. All right, let's take a look at what's going on. Team Atlassian continues to move higher. Okay, never did get down to this level here. Okay, I had a limit order to buy down there. Never got back down there. Just keeps going. Looks good. Team. Okay. Dexcom, Workday. Workday. Adobe. ADBE.
Let's do some calls to the day. Belsky, I'll start with you. ConocoPhillips, target to 136 from 128. That's at Argus, who says today, we favor those E&Ps that are well positioned to manage a potentially long period of volatile oil and gas prices. We believe COP is one of those companies.
Yeah, we've owned it for about 5 years in our value portfolio, Scott, and this is a stock that does very well. You're exactly right with the volatility in WTI. I think it's a little bit more of a kiss when WTI is higher, so we like it.
Chevron, reiterated by 220.
APA turning back up. It's probably going to get above the 50-day. APA, Apache, Chevron, Diamondback Energy. Yeah, energy is the one positive sector today. Very positive. Okay, so again, like what happened on Tuesday, we had buyers at the low of the day. They came in at the 9 EMA, coming right back up. Elevator up. Let's see if that can continue.
So Netflix got a call today. That's okay. That's okay. You're probably watching. Strong buy here. Probably saw it staying on one of the couches.
Morgan Stanley reiterates a strong buy on Netflix. Morgan Stanley.
Reiterates overweight. 115 is the price target. Engagement fears are overblown, and pricing power and ads opportunity are underappreciated. I mean, it is risky having like 8 white couches, right? You gotta fluff those pillows.
I don't think they're real. Is that a real backdrop?
Totally mess that up easily.
It's a gathering space for the family, Scott.
Okay. To watch Netflix. To watch Netflix.
We would agree.
Amazon turning up. Okay.
The engagement fears are overblown. We see huge upside in sports for this business. We bought it when it became
ARM Holdings. Okay, below VWAP. Markets are just kind of taking a break at the moment. Hedge flows. Still rising.
Good stuff. On that note, we're going to wrap things up here. Winning cities are of credit sites and very nap of iron sites. Appreciate it. And if you can't get enough talk on credit, please check out the Bloomberg Credit Edge weekly podcast on Bloomberg Terminal and wherever you get your podcasts. So ahead, New York City Mayor Mamdani ditches his plan to raise property taxes in his latest budget proposal. We'll take a look at what he's now proposing in our mini moment next. This is Real Yield.
Game you're playing right now can't hit a jackpot in 10 minutes. Come try 10 Luck. You have a chance to win big. No ads, no tricks. Any cards you draw cash out straight to your bank account. Just log in and claim your free daily bonus.
I just hit a massive grand jackpot on Facebook. I had no experience. I didn't even win that big. That's insane.
TGIF.
You can quickly claim your rewards and see them in your account. Just try it.
You have a chance to hit the jackpot in 10 minutes. No ads, no scams, no withdrawal limits. You can smoothly access your rewards anytime. Try it now. Luck. Play now.
And make money with your one-stop graduation shop. We've got gift-to-party party essentials all in one place. Plus, order balloons perfectly timed for your party. Your grad deserves a celebration as special as they are. So turn their achievements into party of the year. Credit to venture capital and M&A. We bring you the inside scoop on the biggest deals and trades, plus exclusive conversations with Finance's ultimate insiders. Great scoop on this incredible semester coming up.
Netflix turning up with a little bit of commentary from CNBC. Netflix still down here in the dumps. Day trade maybe. Probably see a buck or two upside. Netflix. Not Netflix. Nvidia. Looking for an end of day short covering rally, maybe. Yet another opportunity to take some profits off into strength. VIX is starting to show signs that it's getting a little bit jiggy. It did fade the high of the day, but came back down. Okay. It was starting to get something going here. I got a feeling people are getting a little more hedge minded. Okay, S&P still trending. Buyers at the low of the day. Okay. We still got 70 handles to go to get back to even. Might see something here. Might see a run up.
Senior markets commentator, overtime co-anchor Michael Santoli is out post time for his midday word. I see a lot of people obviously saying something's got to give, and we wonder if higher rates.
Oracle inside day.
I mean, because all along the market has relied on parts of the index that can be insulated.
Like Santoli.
It was helped along by the fact that we did not break containment on rates. I think one thing that the move higher globally yields is accentuating to everybody is the absolutely massive open-ended capital needs of this CapEx over consumer economy, the build out, everything that's going on reminds you of the same thing, which is that we need more capital and more real assets for everything. And so the scarcity moves and all the rest of it. All that being said, I think it's also the situation where in the near term, on a tactical basis, the NASDAQ, the chips, the memory stocks had already, by everybody's estimation, reached a point where it needs a break. It needs to go looking for an excuse to pull back. We're going to correct. It's a matter of, it's going to be the easy way and the hard way. The easy way being let the pressure out of the most extended areas of the market, have other things pick up the slack, or is it going to be more of a holistic gut check?
Maybe also a little bit of a message from the bond market, not so fast, Mr. Warsh.
Exactly. And as much as I sort of push back against the idea, the market always tests a new Fed chair. I mean, early 2006, Bernanke was not exactly an emergency moment. It was a year before the crack showed up. Even Yellen, 2014. However, Powell's first day was Armageddon Day in early 2018, which was not a major financial crisis, but it got your attention.
Yeah. All right. We'll talk to you later, Mike. Thanks. Mike Santoli. Options actions next. Oliver Rennick at the SIBO in Chicago. He's flagging some big bets in the banks. He'll tell you exactly where next.
Nvidia turning up. Futures turning back up. So Mom Donnie is avoiding tax hikes on real estate, huh?
Right. So we were able to report yesterday that the state of New York is planning to include in its budget a new tax on all cash purchases of residential real estate worth $1 million or more in New York City. This is not going to generate that much money, but this is in addition to the tax that we have already reported on. You've heard about probably the pied-à-terre tax, tax on luxury second homes.
Keep taxing all the rich people. They're going to leave. It's a good idea.
It is actually the majority of home purchases in New York for properties that are $1 million or more. 75% of the transactions in New York would be subject to this tax. That being said,
Microsoft, another higher low. Microsoft. Okay, higher low, higher high. This one's been running all day. Microsoft been doing well. All right.
Legislative leaders are saying that it is going to be in the budget, which they haven't printed and voted on yet, but they are actively negotiating.
Okay, so when it comes to that pied-à-terre tax, the second home tax, is that expected to be permanent or is it a one-time thing?
It is expected to be permanent. However, the structure of it is going to change.
That's confusing.
It is very confusing, according to every party involved. Initially, co-ops and condos will be taxed one way. Single-family homes will be taxed
a new way to evaluate taxes on co-ops and condos, and then they'll all be taxed the same way in 2 years. Okay, it's a bull market for our tax accountants. That's what it comes down to. Absolutely. All right, Laura, thank you so much. Laura Navias, who covers New York City and New York State politics and financing. And we're going to stick with unis and talk about higher education because MIT, the Massachusetts Institute of Technology, has responded to major declines in federal research funding. President Sally Cornwall noted that campus research supported by government money is down by more than 20%. Janet Warren has been covering this industry, and she joins us now with more. So, exactly what is going on here at MIT? So, MIT is reporting that they're actually taking in less federal money than they had in the past. And what's concerning to them is that means they're
Okay.
graduate students.
Apple looks like it wants to go some more, huh? Apple. Okay, all of these are looking good. Back up to the highs. All right, Netflix turning the corner. Trying to push higher. Maybe a day trade there. Nvidia.
To the tune of roughly potentially $300 million a year. So it's a lot of money, and this is something new. They've had a tax since 2017 of 1.4% of their net investment returns, and for the richest schools, $2 million of endowment per student, it's 8%. And MIT is one of the richer schools. Yes. Okay, along with the Harvards and the Stanfords of the world. And by the way, you can check all of this out on ENDO Go on the Bloomberg terminal. So how is MIT responding to all of this? What is it doing? Well, they're doing a lot of lobbying, as the president mentioned in her letter, and they're trying to aggressively pursue other sources of funding, other potentially corporate partnerships. They're increasing enrollment in executive education, where their non-degree programs, students can come a couple of days and spend, $10,000. They're also increasing master's degree offerings. So they're looking for new sources of revenue. They also announced a couple of months ago they're closing libraries. So they're looking to tighten their belts. Okay. I mentioned Harvard earlier. You also have a story out today about how much the university is paying its endowments. What did we learn? So it's roughly the same as last year, about $6 million in 2024. And if you add half a dozen of their top earners, it's about $25 million. So, as schools are belt tightening, it's just an interesting.
Okay. New York Fangs trying to do what it can to get back up to the highs. Amazon just got rejected again. Nvidia.
Right. And of course, there's been a lot of turmoil in the ranks of Harvard's endowment as well, right? A lot of people coming and going. Yes, certainly over the last 20 years, they've had a lot of people changing strategies. And of course, there's private equity to think about, which is not returning. All right. Another story for another day. Janet Warren and Bloomberg.
Futures rejected.
That was a new moment.
Okay, let's see what hedge flows look like. All right, stocks are still pretty expensive all the way on the right. These stocks are still pretty expensive. Hedge flows.
But Taylor, one of the things I'm really struck with is how focused you are on the customer.
The more data you have, the better service you can give to your client in terms of the new best product. Essentially, it's helping us analyze the data in the best possible way.
What about what's next?
Better of the same. It's not more of the same, it's better of the same.
I still remember the first time I held a $20 gold double eagle. To me, it represented security, something that would hold its value. I would encourage you to buy gold and silver from my gold partner, Goldco. Visit goldco.com/kit.
Okay, futures just got whacked. A little dip in futures. It is OPEX for the month. So not surprising. Nvidia no follow through. Okay, a lot of stocks are doing the same thing. Team Malaysian, that continues driving higher. Team, that's been on fire all day. Team looking okay.
I'm Scarlett Fu, and this is Bloomberg Real Yield. It's time now for the final spread, which is the week ahead. Coming up on Monday, we get the G7 finance ministers and central banks meeting in Paris. They have a lot to discuss, especially with bond yields around the world surging. On Tuesday, Home Depot reports earnings, and the Google annual developer conference takes place, as well as some congressional primaries in a couple of states. Then we get to Hump Day. On Wednesday, it's a make-or-break moment for the stock market, with NVIDIA reporting quarterly earnings that is the last of the Mag 7 news report. Plus, the Federal Reserve releases minutes from its last meeting, and we get UK CPI. On Thursday, Walmart reports earnings, and we get more economic data, as well as Eurozone consumer confidence. Then we end things on Friday with University of Michigan consumer sentiment, UK consumer confidence, and Japan
Team
CPI.
Dexcom up a bit off the low. Dexcom, Workday, Zscaler. Okay, Zscaler trying to break up a bit higher. CrowdStrike, all of these doing well. The security stocks. Palo Alto Networks.
He will be chair next week, and next week he will face the Fed minutes. That's going to be the first release that comes out under his chairmanship. It will be the last meeting before he got there.
Zscaler number 4 on the NASDAQ 100. Zscaler looking pretty good. Trending is at the highs right now. I might take these off into strength. Got earnings next week, just reducing exposure again. Zscaler, yeah, that looks good. Zscaler. Going. Zscaler. Nice pop to the highs.
In sync or out of sync were the different voting members?
Well, it's a little bit odd because 11 voted for the statement because they agreed with the idea of keeping monetary policy unchanged.
Okay.
But 3 of them dissented on the bias statement and wanted to change that language. And of course, Stephen Myron voted for a rate cut. But the 3 who did object, we'll see how many others objected.
Apple, look at Apple. Apple's going here. Apple's going a bit more. Nice little pop in Apple. Apple popping.
Michael McKee, our international economics and policy correspondent, of course, he will be with us all next week to break down all the economic data, including the
Yeah, me neither.
From New York, and that does it from us. We continue to see bond yields stay elevated. The 30-year yield at 5.11%, the 10-year yield
All right.
10 basis points at 4.58%.
I imagine the young kids.
It seems like I've been talking. No one's listening. I've been thinking about getting a therapist, a mind wrangler, feeling hurt, or someone really listens to what I have to say.
And buddy, I hear you. Look here on Dot, and point therapist, take insurance. Got a guy straight to the point, no small talk.
No, I see a 4-star, 4, 5, 4. How about a 5, 5, 5?
Here you go, 5 stars. Got a guy. Don't just listen, make it really feel like you're being heard.
So,
You've got options.
love you, buddy.
Download the ZocDoc app today.
Not all gold companies are the same. And when it comes to protecting my money,
All right, that was a nice little pop on Apple.
millions of Americans protect over $3 billion of their savings with gold.
Zscaler.
And request
Zscaler.
Visit goldcode.com/kit. Call 855-297.
Okay, nice little pop there, Zscaler. Looks good. 60-minute trending. Daily, turning the corner, Zscaler. Probably could hold this for a few more days. I'm just going to reduce my exposure.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts. Delivering
Okay, Netflix still turning. Microsoft looking for another higher high. Microsoft, everybody knows Ackman is in it now since February. We had a board member buy 5,000 shares, $2 million worth at $397, was it? $397, yeah. Okay. What's AMD doing? AMD. Okay, fading a bit. ARM Holdings fading a bit. Futures. Buyers at the low of the day. I won't say how far this goes. Right now, we're just kind of moving sideways. Hedge flows grinding up a bit. So this might get a little movement upside. Might get a little upside movement. I would sell into strength. Reduce exposure, day trades, that sort of thing.
Yeah, and the president said that he was uncommittal. Basically, didn't answer him either way. It raises the question: what was committed to over this summit? Yes, Boeing planes, perhaps a couple hundred of them, going to be bought by China. They're going to open the door again to beef coming from the United States, but not necessarily as many tangible deliverables in hand as the president makes his journey back to Washington as maybe some expected or hoped for as he headed off to the summit.
And that's certainly questions about whether a multi-billion-dollar weapon shipment to Taiwan is in fact supported by the president. It certainly is by congressional leaders on Capitol Hill.
Microsoft off the highs. Big move though. Microsoft's been doing well. So the 50-day, that blue line on the right, and that horizontal, that's where that executive was buying, right around 397. 397 would be right 397 and change right there. Okay. That director, I should say. Board member.
Wondering what it's going to mean for monetary policy on what just so happens to be the very last day of Chairman Powell's term at the Federal Reserve. Of course, it's Kevin Warsh's challenge to inherit. It's a tough one.
Welcome to the party. By the way, does Jay Powell get a cake or something? Is there a handing of the gavel? Nothing formal on the schedule?
Maybe they could give him a cake in the shape of a hard hat.
That would be cool.
That would be cool. We might have to arrange that. Hey, Charlie Powell likes my job. Charlie, let's check on the markets on this Friday. How you doing in New York?
I was thinking pretty much the same thing when you beat me to it. Just kidding here, Kelly. The Dow, the S&P, NASDAQ, all very much in the red right now. We got a sell-off in global bonds.
Microsoft. All right, NVIDIA looking like it's going to fade some more here. NVIDIA looks like it wants to fade more. All right, so I'll take that the rest of that day trade shares off.
He's accused of fatally shooting 2 Israeli embassy staff members in Washington. He will face federal hate crime and murder charges. Round 2 of the PGA Championship underway in Newtown in Pennsylvania. Last check, Japan's Hideki Matsuyama sits atop the leaderboard at 3 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet checking on the markets and golf for us. I wonder if President Trump has the PGA Championship on the plane television on Air Force One on his way back from China. I would imagine so. It's a long flight. You got to entertain yourself.
Oh, you guys are funny. You're so funny, Bloomberg. If they weren't so annoying, their politics. Let's switch channels here. They can just keep talking about the trip like we all know nothing came out of it, so they don't need to keep beating it to death. Markets are just off of all-time highs, so whatever Bloomberg has to say, it doesn't really matter about their opinion. Okay, Apple's still pushing here. Apple looking really strong. NVIDIA, I just took it off, took the rest of it off from earlier. I'm out of that short-term 0-day trade on NVIDIA. I'm done for now. Apple looking good. Apple.
Rose 48% year over year. Paying customers climbed 54%, and they do still boast this best-in-class retention.
Okay, futures turning back up. Futures turning back up. So NVIDIA will probably pounce. NVIDIA will probably bounce. S&P's turning back up. Looks like it might get something going here. Okay, S&P. Okay, let's see what the hedge flows look like. Okay.
Drag from heavy stock-based compensation. Roughly 170 million in stock-based comps have driven some of these gap losses. Also, higher compute costs and AI product mix could potentially weigh on their margins over time. AI monetization is still very much in that early stage. Again, several of these heavy users are definitely utilizing the AI rollout, but to me that doesn't necessarily give the full scope of all your users. But nonetheless, they are facing threats from some of the AI native design tools and these large platform players, but a nice report that was at least able to provide some relief today.
Yeah, and I think it always comes down to expectations, right? Like the narrative was it's doom and gloom in these software names. AI is not just disrupting about eliminating them, and if anything, beat and raise, and also a roadmap that some analysts are believing in that AI can actually be a strategy for this company. Speaking of a company that's trying to have an AI strategy and has some big-time believers, the likes of Jensen Huang, and that would be ServiceNow. Nice move here today at 5%. As it's got some corporate news as well, but software as a whole, quietly under the surface, Jenny, it's actually doing nicely.
It is. That's a really good point. We're up 5.5% today in ServiceNow, a name that has, seen a major rewriting.
Okay, we're right up against this resistance level. It's 99 percentile. 74.30 is 99 percentile. We're right above that, 74.35. Do we pop above it and start running? Looks like resistance for now. Looks like resistance.
So by connecting Experience Ascend platform with the ServiceNow AI platform, businesses will gain direct access to Experience data.
Tesla turning up. Tesla might be a trade. Tesla turning.
The companies did highlight this integration is designed to help organizations scale their AI deployments beyond just these pilot programs. And industry research they highlighted has identified data limitations as perhaps one of the top barriers in 8 to 10 organizations. So
All right, watch. Tesla might do something here.
There's still these highly regulated industries that do feel as though there should be.
Okay, watch Tesla. All right, I like these 1-minute charts, especially later in the evening. What? Tesla coming off the low. All right, this might be a runner, Tesla. Okay, I'll try a little bit on Tesla. I'm going to do today's 0 day. See if this goes at all. Tesla, come on. Thinkorswim is slow. Tesla.
Hardware broadly, as measured by the SOX, is down 3.1%. Is this just, in your mind, the tide pulling down a company like Applied Materials? Because the numbers don't look that bad.
No, they don't look that bad, and I think that's actually why we're not really making a huge move, because they said, I mean, they expect stronger sales for the semiconductor business than they had previously even expected.
All right, I bought some 427.50s. Let's see if this goes at all. Tesla.
And so they did say this was a record quarterly performance, and the company expects its growth to continue alongside the rapid global build-out of AI compute.
327.50 call.
To support this, saying that AI adoption is accelerating and diversifying.
$1.45 filled.
Durable demand for semiconductors. Overall, though, I mean, this is a company now projecting that their semiconductor equipment business will grow more than 30% this calendar year. And then again, was
all right, NVIDIA turning back up. NVIDIA.
20% increase, and guidance was equally as strong now going forward. So revenue climbed 11%. There's a lot to like here. My only degree of skepticism was like, we have been on a run in this name. We're up 70% on the year. We just made highs several sessions ago. We're only about 2.5% below those highs. And we've risen now 115% over the last 52 weeks. So I would say maybe it was just the fact that this name had been so strong, we were seeing a bit of a breather. And again, I think that an 0.8% move to the downside feels like a win here.
I'm so happy you said that, because that's essentially what I was going to say is, look, if you're an investor in this name, be grateful.
Right.
It's been a nice run. You're down less than 1%, and you're through one of the biggest risk factors that any company.
All right, looking for Tesla catch a bid.
Which is corporate earnings. It's a good place to be. Basically at all-time highs. The market's down today. Set expectations accordingly. It's been a wonderful run. It may continue.
You're right. It has been a wonderful run. And today's move, I know, bit of a snag, but not even really. So we're not seeing some of the pressure we've seen way on, say, other names.
All right, short starting to cover.
It's most recent quarterly earnings. But last name here today is actually not an earnings mover, and that is Ford, which is pulling back following a pretty massive two-day rally that did ignite some overall enthusiasm. We're down another 6.8% today after surging nearly 22% on Thursday. And that marked, at least through Wednesday and Thursday, its strongest two-day performance since March of 2020.
Okay.
This began after Morgan Stanley did highlight their Ford Energy business, which is this new subsidiary that focuses on these battery storage systems. Morgan Stanley believes this unit could one day be worth roughly $10 billion, noting that this value equals Ford's entire commercial vehicle franchise, and calling this licensing deal contemporary Empiric's technology an underappreciated strategic competitive advantage.
Tesla turning the corner.
To secure supply agreements with hyperscalers within months. And they said that Ford Energy also targets key data centers as well as utilities with plans to deploy
Tesla's on the move.
Gigawatts of hours of storage annually. So they expect this will also add to their margins and say that, again, the business could continue to grow from here. So I think this is a really interesting call, especially when you consider like these legacy auto players. Obviously, we've seen a shift away from those tried and true EVs into more of a hybrid world. But it's interesting. It's almost taking a step out of like Tesla, which obviously operates its own battery.
All right, so 0 day.
I know that they've seen a pullback in that business, but it's still been a phenomenal growth aspect of the company.
Let's see where 0 day goes. All right, Meta is at the high of the day. Apple's at the high of the day. Microsoft will get there, I'm sure. Tesla coming off the low. That might be a nice little runner.
A pullback from that kind of move is natural. I think it found support today at a place that makes sense around its 1-week moving average. We'll see if it can continue this run, because if you look at where it closed yesterday, it kind of got back on trend for the last year. And that's a good place to be for a company that's had some pretty notable struggles over the last decade.
It has, and it has not been an easy run. This name doesn't typically see that much volatility, although this week it definitely has. So I agree. I would say definitely take the good news as you can get it, sort of when you're in the more legacy auto space, which has also been fairly pricing challenged for years now. But we will leave it there for the top of our show today. Now, coming up next, we will chart and trade 2 restaurant names Moving on separate headlines, Texas Roadhouse riding strong traffic and an RVC upgrade. Papa John's is getting a pop on takeover buzz. So we'll dive more into the details with our chart master up next.
Okay, NVIDIA turning back up. Okay, there goes Apple. Apple again. Apple. Apple. Apple back up to the highs. Apple's back to the high.
Congressman, finally, as you have a seat on the Transportation Committee, I'd love to ask you, as we consider another geopolitical challenge the U.S. is facing, it's obviously how to extract ourselves from the conflict with Iran and how to get the Strait of Hormuz back open and energy flowing out of the Middle East. Once again, the president has floated an idea of a federal gas tax holiday. Do you support it, knowing it could mean a hit in the fund that funds so much of our critical transit infrastructure?
Oh, gosh. A couple of days not paying a tax, and that's going to impact the infrastructure, roadway, transportation. That's just silly. So this representative from California is saying that they need to expand supply. So the governor runs all these energy companies out of California. I'm not sure who's left. I know Phillips 66 left, right? Politicians. Crazy. All right. Just watching, see what the markets are going to do. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We're looking for some stocks to reverse off the low of the day. Tesla coming off the low. NVIDIA looks like it is going to go as well. NVIDIA. We got earnings next week on Wednesday after the close. A lot of these chips are starting to come off the low of the day. Apple's at the high of the day. So is Microsoft, just off the high of the day. Meta's at the high of the day. Meta looks like it wants to run a little bit more. Meta. Okay. FBL. I have some FBL shares. Okay. Need to get back above the 50-day and into this gap. Meta's going to take some time. Okay. Energy stocks, there's a few in the top 10. Apache, ConocoPhillips. What's Zscaler doing? Zscaler. Okay, that continues. Zscaler.
Well, Rick, I know that you see the political opportunity for basically anyone who's in elected office right now to pursue a federal gas tax holiday. My question is, how quickly do you think it realistically
All right, these guys are annoying. They're so full of it.
Another area to look for potential pause in this name. But so what we have here is a bit more of a holding pattern in the past week or so. So when we do consider some of our moving averages that we follow, our
okay, Meta looking pretty good. Meta's still going here. Meta pushing a bit higher, higher highs, higher lows. NVIDIA looks like it wants to go. NVIDIA, kind of hard to tell here. Grinding higher. NVIDIA, Apple, 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 back up to the highs. Futures look like they want to go some more. Futures. Let's see what hedge flows are saying. Hedge flows. Okay, above this level, there's not. You can see there's not a whole lot up here.
RSI to resurge to make new relative highs to push into that overbought area, along with price making new highs as well. Volume profile in this case shows that we have backed off at the edge of our more significant trading boundary to the upside, 182 to 188.
S&P, what are we going to do here?
Area here that signifies heavy trading. So this could be one area that the bulls would want to clear above for further upside. Meanwhile, to the downside, a little bit murkier here, but 170 to 175 stands out as more of a concentration area. Meanwhile, the point of control, the heaviest trading area of all, comes in down here near 166.25. Finally, too, quick note, we have several volume spikes after our push to the upside. Heavy volume during a big move often signals high conviction on the part of traders.
Yeah, and a good point there. And again, I know modestly higher here today, but also receiving some analyst praise and some decent earnings, of course, about a week ago. So
Futures look like they're going to tick higher here. Watch the futures. Looks like we could get something going here.
For example purposes, Alex, leading into the fact that we have been actually considerably resilient in the broader restaurant space.
Yeah, definitely. And so a little bit shorter term trade, not the most liquid of names, but kind of an at the money, just hold the line type of a strategy here. Selling a put vertical 177.5, 175. So $2.50 wide spread to keep things relatively contained and tight from a risk reward standpoint. It's next week's expiration, 75 cents. If you're able to collect that, you risk 175, chance to make 75 with a 176.75 break even, Jenny. So it's neutral to bullish, but this is teetering on just outright bullish given the fact it's basically trading at our strike.
All right, SPY. Let's see what SPY does here.
So there's not a bunch of cushion.
Okay, SPY trying to push.
Like right here. So you're starting in the profit territory, but there's not a lot of cushion in case this stock does fall under some pressure.
Okay, yes, but risk defined, as you mentioned. So, of course,
Futures starting to go. Futures starting to go. Watch your hedge flow. Watch your hedge flow. Hedge flow is still rising.
As a result, really, of this added interest with a potential buyout happening. And so, kind of an interesting story because we're also seeing some news that's been floated this year, at least regarding Young Brands, of course, divesting its Pizza Hut and that being sold elsewhere. So it's interesting to see the consolidation perhaps happening in the broader pizza space. But this has been a bit more of a disappointing chart, Rick.
What will happen to the combination Pizza Hut and Taco Bell's and everything then? That's kind of a strange...
With the KFC, and I like the combo restaurants as well.
Yeah, but anyway, going off on a tangent there, but one of these charts that has kind of two distinct phases here where we had a consistent low point all the way back here, and then here where we had this supportive zone between about 38.30 to 39.30 roughly. Then we had our breakdown. This same area then came back into focus as resistance. So old support became new resistance. From there, we have traveled more in a sideways range here. Even earnings couldn't really save us from this range-bound activity. So now, between about 30 to 38, 39, as we said, are the two boundaries to watch for a potential push in either direction.
Oh, here we go. Future's starting to go.
Stuck out is 35.
Future's starting to go.
We had our breakout, but then we retreated. Often a support
what is that? That is 74.30.
We've seen our rejection today as well. After the initial pop to the upside, this seems to be where we're stabilizing. So it'll be interesting to see if we can push above this level as we head into the close of this trading week. Nevertheless, though, downward.
Okay, Nvidia's starting to go now. Nvidia.
There has been broken. We seem to be hanging out above it for now. That's about where our lows came in so far today. When we do think about our moving average picture here.
Okay, ARM Holdings turning up. Okay, so stocks are starting to catch a bid. Stocks are catching a bid. You can see hedge flow is still rising.
We are hanging on roughly to our 63-day quarterly EMA in gold. 35.12 is where that one comes in. If we were to keep pushing to the upside and break through this rather modestly sloping downward trend line here, the next stop would potentially be our 251-day yearly EMA near 39.88. RSI showing a bullish crossover as well. New relative highs and breaking above the 50 midline. So more of a bullish outlook in terms of the shift that we've seen today based on both our moving averages and our momentum indicator that we follow. Now, if we were to think about volume profile.
Okay, Apple making new highs. Apple.
You see a large block of volume according to our profile here. It signifies that there's been some kind of significant low formed. So in this case, the node
Apple's still climbing. Here's Apple.
Some of our heaviest
Apple climbing.
34 is the biggest range of all in this area too. If we were to start breaking upward once again, the area around 39.50 to 41.
I keep clicking the wrong button. There goes the S&P. S&P cash is going. There goes S&P cash turning up. This could be a nice runner here.
We did have volume spikes here. They kind of pale in comparison to some of the previous spikes we saw during the year, but relative to our 50-day moving average of volume, they are still above that threshold here. So again, heavy buying.
Okay, Microsoft's about to break out. Microsoft's about to break out.
Yeah, no, and absolutely. And of course, we are getting a pretty big pop today to close out a nice week for Papa John's. And so up 6.7%. Appreciate it there too, Ricky Pat, our chart master, for all of that breakdown on the technical front. But now, as we look to lead into an example trade with Papa John's, perhaps leaning more into the uncertainty with, of course, the future of this company.
Yeah, and it's also been kind of range bound technically. So if you think it can maybe test the lower bound of that range again, it's a bearish put calendar looking for a move towards 30. Month over month. So selling June, buying July. You got some time for this to happen. It's a dollar debit thereabouts. This is a trade, all else equal. If the stock just sort of stayed in this range and bounced around, this typically wouldn't move
Nvidia.
much. So you're going to need the move lower, but it
Netflix.
has time for that to happen.
Tesla.
A trade that's going to move slow. So if you don't have the patience, the longer term calendar spread, maybe not a strategy to consider. But $100 in risk,
Meta.
in exposure, looking for a move towards 30 over the next month and a half.
Yeah, looking for maybe some
Okay,
answers
looks
to
good.
a lot of looming questions for that company, which has been stuck a bit in a more downward trend. But we will leave it there for Chartmaster today. Now, coming up next, it's time for FOMO. We will dive into the move we are seeing today and Arista Networks, following some bullish analyst activity and some reasons to be optimistic about this company as we move into, of course, the latter part of this year.
There goes Tesla. Tesla. There goes your Tesla.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets. Follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
There goes. Nice little pop there in the S&P.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Hayden, and our podcast is slowing things down. We're going
ARM Holdings turning back up. ARM.
of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you.
There goes Tesla. Tesla. Watch Tesla here. Tesla going. Coming off the low. Tesla.
Markets. Download the Schwab Network app and get live coverage.
Oh, man, that voice. Okay, Ray Dalio. Let's see what he's got to say. He seems to have a lot of hyperbole sometimes, but worth listening to. Dalio. Read a couple of his books. They're really out there. Tesla. Okay, Tesla looking good. All right, Tesla making a nice little change in direction. Shorts covering, most likely. SPY on the move. Here's SPY. Okay, SPY.
Welcome back. Canadian dealers are racing to get their hands on Chinese-made cars, but can they even get enough of them?
That's a big mistake. Tesla on the move. Okay.
As we cut back on rules. And then we've got a favorite for us all, which is taxation, and particularly Miriam Mamdani's battle with Ken Griffin for that so-called hit-a-tear tax. And what that really is going to make a lot of difference in New York City. So we talk about that as well. Near and dear to the hearts of all of our audience, I suspect.
Indeed, we're looking forward to the show. David Weston, host of Bloomberg Wall Street Week, which you can catch at 6 p.m. Eastern Time on Bloomberg TV and radio. Thank you so much, as always. And absolutely fascinating to hear from Ray Dalio about this concept of relative power when it comes to the U.S. and China, because this is also something we explored in an interview on Balance of Power last night with Democratic Congressman Jake Auchincloss of Massachusetts, who was also talking about the power dynamics at play here. He doesn't think that they favor President Trump. Listen.
The videography and the symbolism have been more interesting. This is the first time since World War II.
All right, Tesla continuation.
And it wasn't clear who the most powerful person in that room was. And that is a statement about
NVIDIA running. Okay, all these New York fangs look a lot better. All right, looking much better now. Okay. Tesla, if you caught that from the low, that was a really nice little setup there. Still going a little bit. Tesla. SPY, that's a nice little turn as well. SPY. Can we fill the gap? That'd be kind of cool. Got plenty of time. 2.5 hours. Got 2 hours and 28 minutes to go. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is May 15th, Friday. NVIDIA, nice turn in NVIDIA. NVIDIA, very nice trade there. NVIDIA, if you're still in it. Couple hours to go with NVIDIA. Okay. So that could keep going. NVIDIA.
President Xi may actually give people the impression that he was kowtowing, to use a Chinese phrase. The reality is, his presidency has probably been seen as the most powerful execution of American power, both economic and militarily in our lifetime. And it has shown the degree to which the United States can hold sway.
NVIDIA still okay. There goes Microsoft breaking out. Microsoft.
China has never exerted that kind of financial and militaristic influence around the world. They have been choosing a different path to do.
Microsoft, new high of the day. Breakout. Unusual day.
Joe Biden's China director on the National Security Council echoes the sentiment of Jake Auchincloss, Jim Kessler, saying she has done something Chinese.
All right, there goes Microsoft. All right, NVIDIA. Okay. All right, there goes Amazon too. Amazon. Okay, cool.
Look, I think there's a dichotomy here because on the one hand, I agree with Rick Davis in that Donald Trump does project power. America has been projecting power clearly, like Venezuela, other places, throwing its weight around. On the other hand, and the Bloomberg article you cite gets it exactly right. Xi Jinping was prepared and Donald Trump was not prepared. And this summit was a disaster.
How do you know? You were there? Dumbass, you weren't even there.
Laid the wood on him right away on Taiwan, and Donald Trump gave the wrong answer on it. And, you know, this is a situation like...
Who is this guy? Jim Kessler, Third Way. Yeah, I can't listen to this nonsense. This guy's reading minds now. Kessler.
They think the AI networking momentum will continue. They believe the analyst upgrade is going to improve the sentiment, but they're aware that the stock may grind higher rather than move quickly, and they want to protect their assumptions with a risk-defined trade. On the time horizon, I did do 60 days, which is a little bit different than what I might normally do for a trade like this. But we've got a lot of macro geopolitical things going on. I wanted to give room for the shares to potentially move based on that and allow time for this move upward to happen.
Yeah, and of course today seeing a bit of a pullback here, but has been at least, one to definitely watch as it's been volatile. We are still hanging on to at least a 10.5% gain on the year, but now pulled back about almost 20% from those highs. So appreciate it, Jeff, for all of that breakdown on, of course, some of the analyst calls and broader price activity we are seeing in Arista Networks. Now, coming up next, the job market may be stabilizing on the surface, but for entry-level workers, the picture can look very different with fewer openings and growing concerns about AI's impact. So we'll talk through what this means for trying to start your career when Next Gen returns.
There goes Tesla. Okay, NVIDIA. There goes NVIDIA. Okay, cool.
Actually, we invest with Schwab now.
All right, big move there. End of day. Nice little rally up. Nice little rally up.
Schwab helps me generate retirement income. All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network. Welcome back to Next Gen Investing. Now, Boeing shares are tumbling today despite President Trump saying that a big order north of 750 Boeing planes could be coming. So for some more details, we're now joined by Sam Vadas, host at Schwab Network. And so, Sam, the selling really began, of course, Thursday when shares pulled back almost 5%. What do you make of another day of pressure, of course, here for Boeing shares?
Well, what does it tell you, Jenny, about investor reaction, I guess, as to how convinced they are about this deal? I think that really says it all. Because even when we got this announcement yesterday, shares remained under pressure, even though we did see a pop earlier in the session before retreating, and we've continued to stay underwater here. And what's interesting is that there have been some
Tesla going. All right, looks good.
who have been linked to this trip, representing $15 trillion worth of market cap, were tied to the so-called
Okay. Ow.
shares in Apple popping to all-time highs, Nvidia at a record high as well.
Okay, this looks pretty good. Nice little rally up.
So the details are that President Trump has basically told Fox News that the Chinese are going to be purchasing 200 planes. If you actually listen to the interview, he kind of says it's a statement, he kind of thinks it's a commitment, but it's not entirely clear. And the point of all of this, and maybe
God, your people just won't stop.
platforms you think of, yours, I don't know, Robinhood, everybody else, that everybody's going to want to give clients access to all of these as prediction markets go.
NVIDIA is still going here. NVIDIA, big run up on NVIDIA. Okay, NVIDIA. Okay, 742. NVIDIA. Nice breakout. Nice breakout.
When you and I spoke in the past, we were talking about this question of prediction markets. You were very clear that you wanted to include the ones that were kind of high level, and that were real into your trading audience.
Absolutely.
Does that remain the case today? And are you selecting, in other words, is sports going to be on the platform?
Yes, on our platform, you will not be able to trade sports, for example. But we will certainly aggregate all the economic indicators, the election probabilities, the climate events, etc. Right.
All right. So your stock is up 68% over the past year. What do you think is driving it? We see similar phenomenon with SIBO. are we seeing that an increase in the number of options, contracts, bets that the public and institutions are placing is driving engagement with platforms like yours?
Well, our stock price, I think, is rising because it's evident that we have more and more customers, and customers come to our platform. They have successfully beat the S&P over the last 3 years. So we are providing the preeminent platform for sophisticated
NVIDIA, nice move there on NVIDIA.
Then my final question is, can you explain to us where in the kind of regulatory and legal system you view prediction markets as sitting? Because I still don't fully understand the answer to that.
Well, it is currently regulated by the CFTC. We are looking at potentially questions that will be regulated by the
Okay, Oracle, looking for more upside. Oracle, can we get above 200? 200, 210 is the strikes I have now. I want to take profits. I told you once before, I have March 200, 210s. I bought those when in April when Oracle was just about ready to change direction. So I wanted to have enough time. Now that we're near 200, 210, once I get up to 210, I'm going to take those March 200, 210 spreads. I'm going to sell them, and I'm going to buy something a little closer, probably like July, something like that, since tech tends to outperform during the month of July. NVIDIA, okay, NVIDIA, nice little profit taking there, NVIDIA. Okay.
Its market cap topped $100 billion yesterday and now sits just under $65 billion. Still a pretty impressive debut. We'll be right back.
Apple, Nokia, Zscaler. Okay, Zscaler. Zscaler. I'm going to take some profits off of Zscaler. I'll keep some of these into next week. Zscaler. Bought these yesterday. It's at the high right now. It broke out. So I'm going to take some profits, just reduce my exposure into next week. Earnings. Okay, Zscaler. Take half of that off. Okay. Microsoft. Really nice day on Microsoft. I don't have anything else expiring today, no. No, at December. Okay. Okay, S&P pulling back in a little bit. A little bit of a, let's see, SPY, SPY. Okay, let's see what hedge flows look like. Hedge flows. Okay, starting to peak a little bit. We're above this volume, but we're above this gamma bar right here, 74.30, 99 percentile. Okay, pushing through this area. We got plenty of time left if they decide to push this a little bit higher. Let's see if these people are new. Yeah, these are new. You see these? I'm just pointing at the screen like you can see me. You see this 74.70? Watch this level here. That's growing. So they're selling up here. They're selling premium up here. We pushed through 99 percentile. We're grinding higher. Okay, looking for more upside. SPY. Okay, NVIDIA looking good. I'd be selling into strength, short-term positions. NVIDIA, okay, looks good. Okay, Tesla, higher lows, higher highs. And Tesla. Okay, a little bit of pullback there in Tesla. 2-minute chart. All right, looking for another higher low. Tesla, higher high. NVIDIA's going. NVIDIA's doing well. Okay, NVIDIA. Let's see, NVIDIA. Okay, NVIDIA looks like it's going to run, right? NVIDIA looks like it wants to run.
Apple has been criticized for looking for a better strategy when artificial intelligence, and now it's facing a potentially big setback, a fraying relationship with OpenAI. Kate Rooney has more in today's Tech Check. Kate.
Hey, Kelly. So from what I'm hearing, that relationship between
NVIDIA.
Apple and OpenAI is cooling off, and at the same time, Amazon is actually becoming more strategically important to the AI giant. So a source familiar with the matter confirms that OpenAI is considering legal action against Apple. This started a couple years ago when ChatGPT became the main AI model for Siri and Apple Intelligence. It is a powerful distribution channel, of course, with billions of iPhones out there. But according to one person, Apple has under-delivered, has not met the expectations, and OpenAI is now considering a breach of contract letter or a lawsuit eventually. Bloomberg was first to report some of these details.
Yeah, and you guys just beating it to death like we really care.
To see that early level interest from employers starting to pick back up. The second part of that question of our retirements and then the wave of retirements that
NVIDIA looks like it wants to go here.
create more opportunity. And
Okay, can we fill the gap on NVIDIA? That'd be awesome.
you know, according to census data in 2024, which is the most recent we really have for this, over 14% of the labor force is 60 plus. And so, you know, we see this aging population. We see a lot of people staying engaged in the workforce later in life. And then that's really, you know, leading into some of that lower turnover and lower, you know, hiring. But a lot of those roles are held by people who have been in them for 30 plus years. And so the pipeline to getting there isn't really something that young workers are really going to be able to jump right into. And so employers really need to
Okay, NVIDIA's going to go some more. NVIDIA more.
creating advancement opportunities to take somebody from entry level
Okay,
into
NVIDIA.
that type of role in the future. And so I think that's really where we need to focus right now.
Okay, there is also
Nice.
some
Meta.
concern that AI is reducing a lot of these more entry-level positions. And so how much of that fear is really grounded in reality or perhaps perception at this point?
We're really seeing from the grad perspective, there's a lot of perception that AI is the reason that the market is difficult. When we look at the data, what we actually see is, you know, 2021 and 2022 were these massive years.
SPY. Okay, we're just sitting here. SPY.
A lot of job growth that would have been spread out across many years, where people entering into the workforce at that time were seeing so much turnover, so much growth. It was really easy to switch jobs. It was easy to make, you know, more money doing something else. And so we had a lot of this.
Okay, hedge flows. Okay, turning up again. Hedge flows turning up again. Okay, so we could, let's see what Charm looks like. Charm. Okay, maybe 74.50 or right in this area would be a good place to hedge or to pen rather. Okay, it's a little bright. A little bright there.
But you know, if you read any headlines in the news, everything is focused around AI in the market, these big, you know, claims that AI is going to have some massive tangible impact on labor. We haven't seen any of that actually come to fruition yet, but the perception for these young folks is that
Okay, I'm watching that hedge flow line. You see the call walls up there at 7,500. Can we run some more? Meta still going. Meta. Okay, NVIDIA high today. Microsoft still going. Microsoft. I jumped out of Microsoft earlier this morning with some options that I had expiring today. Had I held on to those 420, 430s, I'm almost at maximum profit now at the 430s. So you win some, you lose some. I did manage to recoup some of the losses on that particular position, but everything else that I have in Microsoft is in the money or looking good. I have June options, 430, 450 calls, and I got December 2027 420, 430s, which are doing really well. December 27, 2027. Okay, Tesla looking for a higher low, higher high. Meta.
Great place to leave it. So appreciate your time today and happy Friday. Nicole Michelle, labor economist at ZipRecruiter. Now, coming up next, we will look at the post-earnings surge in trio tech shares. A smaller, so not going to
opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for Under 30, and we're diving into Trio Tech, reporting a major jump in revenue, up more than 120% this quarter, driven by, of course, demand in AI and automotive chips. But for more on this big move higher today, we'd now like to welcome in George Tillis, Senior Markets Correspondent for the network. George, walk us through what stood out to you in this report.
Well, I think this is another interesting name in the context of semiconductors. There's a lot going on with not just manufacturing semiconductors and deploying them and utilizing them in data centers, but there's also this whole ecosystem of companies that is testing these semiconductor systems on a recurring and an ongoing basis. And Trio is another one of these names. Some of the names I've talked about, just to give you a couple examples, include AHR test systems, Keysights, Symbol Keys. Both of those names also doing very well in the last year. And Trio is also a much smaller name that's doing quite well last year, up over 400%. But they do design, manufacturing, testing systems for the semiconductor industry. Their focal points seem to be like factory automation and EV applications. And they actually talk about how the EV demand is being ramped up, as well as the reliability of semiconductor testing equipment that they're selling. They're not a very large business. Market cap as of yesterday is around 140 million. Sales for the quarter, as you mentioned, Jenny, up to 16.5 million, up 124%, because last year they generated around 7.4 million. They lost a penny on a GAAP basis, but they're getting closer towards profitability. But there's more backlogs, they denoted, for their testing equipment, and that's been a huge catalyst for the shares. Up really nicely today, up 33%. And in fact, if you look back at the huge gap they had back on the 23rd of April, that seemed to have been a catalyst associated with a direct offering of 10 million shares to a institutional investor. So that's a sign of confidence. This goes back, like I said, to the 23rd of April. And effectively, that looks like it's manifesting very well for that investor who essentially placed $10 million.
George, we've talked about a few of these names recently. I can think of one. I think it was like Everspin or something. I think it was MRAM was the ticker. I know they're all kind of different, but it seems we're at the point in at least this leg of the rally where we're picking up rocks and we're checking underneath them for any opportunities here. And that doesn't mean that these big names are slowing down, even with the pullbacks here. But what does that general trend tell you? That these like very small niche companies are just having monstrous rallies as well, as long as they can show that they're benefiting in some ways from this AI build out?
Well, there's there's a trickle-down effect to the smaller cap names that are participating in the same sort of ecosystem industry-wise as the bigger names. So semiconductor equipment, whether it's AMAT, LRCX, or KLA-10 Core, then there's all these, mid-tier, and these are smaller tier companies, like TRT is a much smaller tier company. They're getting spillover benefits from what's happening with AI. Percent changes in these names are quite robust in a lot of these small cap names. I mean,
we just got over about 2 hours to go, and it looks like we might make some higher highs and higher lows.
So with that said, again,
NVIDIA, Tesla.
Wall Street will start looking at individual names more closely, and those who have meaningful and more stable and growing revenue and EPS numbers will benefit. Others will fall by the wayside. But I don't know when that'll occur. This market seems to have an appetite for taking risk on anything associated with AI investment, which again, I can make the case. You can make the case is really there because we're talking about trillions of dollars of investment in one specific area of our economy, and there's a trickle down effect that's benefiting the specific names. But some of these names are so big in the semiconductor and hyperscale space, and the market capitalization of these names relative to the indices are so large, it's pulling the entire market higher.
It is. I mean, and good point there. Now, 33% move despite the market not really giving much really credence to some of these tech names. And tech earnings, frankly, that we've seen very uneven. There still have been some major winners. So appreciate that. George Tillis for running us through, of course, the move today in Trio Tech. That'll also do it for Alex and myself for Next Gen Investing for today and this week. We have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
time. We're coming to you live from the floor of the New York Stock Exchange. I'm so glad you're with us. Did you see Dow 50,000 yesterday? Not today. We have a lot to talk about on today's show. We'll spotlight tech and the state of cybersecurity. That sector is so important. Dive into the chip market. We'll prepare for NVIDIA's earnings that are coming up on May 20th. And Alex Coffey is standing by and has real options trades. And he's looking at ExxonMobil, Taiwan Semi, and Disney. Real trades that he found in this market. Quick look at the market. So we had 7 weeks in a row of gains, but can we hold those between now and the closing bell? I don't know. Yesterday we saw records for the S&P and the NASDAQ. Right now we're up about 0.7% for the week on the S&P. And for the NASDAQ for the week, we are up 0.42. So it looks like we'll still clock those in. S&P's at 74.51, closed yesterday above 7,500 for the first time. It's down almost 0.75%. The NASDAQ 100 down 0.75%, losing 222. The Dow Jones Industrial Average down over 400 points, and the small caps, the Russell, down 2%. This is yields have been on the rise. They're not at the highest point, but they're still elevated. And taking a look at the heat map here, you're seeing somewhat of a mixed bag for the Mag 7. NVIDIA will be next week. We have news on Microsoft with Bill Ackman. There's so many names to watch here. Palo Alto, CrowdStrike will be talking about cybersecurity in this show, indeed. And you continue to watch names like Exxon and Chevron higher as oil has been around $100 the barrel. As I check my chart here, I can see it /CL on the Thinkorswim 105. And on the contract, the futures contract of the next month, 100.69. Gold at 45.63. That is down 2.6%. The 10-year bond yield at 4.56. The U.S. dollar 99.15. And Bitcoin is 79,595. So, you know what? I'm going to go ahead and say the 10-year yield is still at the highest level. The 2 years around 4, the 10 years at 4.5, the 30 years at 5. And so these are the highest levels of this year and actually since mid last year. And there you have it. That is the big picture. And it's the worst day since March for us here today with all the selling that's been going on. But we've had so many movers, and there are some winners, but you got to try and find them today. Market moves. Joining me right now, Diane King Hall. And we're looking at a market this morning. I was listening to Jay Woods, who was talking, Diane, about this market that has run up for 7 weeks. You know, the question, is it overbought and all that? And he was saying 9% of the S&P 500 is hitting new lows. He said that's highly unusual to have that at a time where the S&P and the NASDAQ are actually hitting record highs. And that was an indicator to him.
Yeah, because when you think about the scope of the gains, a lot of it has been in the tech sector. We watched this fever pitch run, the exuberance around the tech trade, the
NVIDIA still going. NVIDIA,
for instance, which hit a record yesterday.
looking good. NVIDIA.
Today, you got AMD that's been under pressure today, Micron. So you're seeing a pullback in the tech sector, and obviously with the weighting of companies like this, it's a heavyweight. When you think about Atlas shrugging, for instance, that's what happens when NVIDIA shrugs. It takes down other peers along with it. You've got that step back today after, you know, all the momentum around the AI trade yesterday. For some, it may be a bit of regrouping, but some also point to the aftermath of the summit in China between President Trump and President Xi Jinping, pointing out that there weren't really any concrete things that came out of it. No major policy breakthroughs, no concrete deal news that we've heard so far. Yes, we heard deals about Boeing, for instance, but even Boeing is pulling back today, adding to some of the deceleration that we saw from yesterday. It's down about 30% right now, because even though there was an order, given what expectations were going into it, going into the summit there. And then President Trump said, he posted on True Social about his counterpart there didn't push on the Strait of Hormuz. And so there's no sign of a breakthrough when it comes to that standoff over that crucial waterway. So we've got oil prices higher once again. We're sitting at above, in terms of the contract I'm looking at here, above $105 a barrel. Brent also higher today. So, you know, it's no clear insight with regard to the war with Iran. So speculation has risen around what does that all mean. So you got some pullback of risk here. on equities, especially after we saw those eye-popping numbers out yesterday. Even the public debut of Cerebras yesterday was great. It was wonderful, but you got to pull back here where investors are pulling back off of risk, Nicole.
Right, indeed. You know, the July contract really more around the 99 level. Here for oil at 105. This is one of those days where they start to transfer over, and so we've spent the whole day trying to cover both numbers because they both appear sometimes. That being said, you know, the takeaway here, one of our guests, Russell Hackman, described Trump's Xi meeting as not exciting, and I think you summed it up so well. The H200 trips, you know, we didn't get clarity. We do know that she was now for the Strait of Hormuz being open and not a tolled highway of some sort. So, I mean, that showed some support. It didn't say.
Okay, S&P continuation.
You know, so a lot of interesting. But it certainly was good luck, without a doubt. Let's get to an important story here, and this is all about Microsoft. And so, billionaire investor Bill Ackman revealed.
NVIDIA is still going here. Nice. NVIDIA, very nice move. All right, can we fill the gap? That'd be nice. NVIDIA.
So he revealed this news stake. He calls it a long-term core holding here. He pointed to the dominant 365 software suite, fast-growing Azure cloud business. We know Azure, the heavyweights when we talk about the cloud businesses, is Azure, AWS, and Google Cloud. Google Cloud's been the leader here. His firm, Pershing Square, started building this position earlier this year, stepping in after the stock had dropped.
Okay, NVIDIA looking really good here. NVIDIA. Very nice.
Azure growth is robust. Microsoft's enterprise footprint is, quote, nearly impossible to replicate. It's deeply entrenched in a lot of different companies. It expands Pershing Square's exposure to big tech. We know they've got stakes in Alphabet.
NVIDIA. Nice trade there. Bill, you still in this? I imagine you are.
Date for our Fed chair. It's goodbye. Jay Powell will stay on as a governor, and Kevin Warsh comes in to lead. Stephen Myron steps down, out, and said that it was one of the greatest honors of his career. I think he said something like that. You know, what next? I mean, Warsh has his hands full.
He does have his hands full. It's the end of one era, the beginning of another era. Jerome Powell passing the baton of the Fed chair to Kevin Warsh. Many are obviously reflecting on the tenure of Powell while also talking about the landscape, as you mentioned, Nicole, that sits before Warsh. It's one that at the end became even more complicated with some partisan rhetoric happening around that. Powell, of course, tried to keep the focus on the data.
Okay, NVIDIA. Very nice move on NVIDIA. Okay.
That is the expectation for Warsh, but the picture in front of Warsh is complicated, especially when you think about where inflation sits now. We got two prints this week that were warmer and hotter than expected. For CPI, the cost of living in America, that rose 3.8% annually, the highest rate since 2023. For wholesale inflation,
Tesla looking for more.
6% year over year. That's the hottest level in several years. What's happening now when you look
Took some Zscaler off into strength. Got earnings next week. Microsoft having a great day. Microsoft, one of the better days that I can remember over the last 12 months. Single day move. Very nice on Microsoft. Okay, so we're starting to see a little profit taking up here, NVIDIA.
Where does the Fed go next? It's no easy path for Warsh.
Years at 5.1%, the highest in a year, and yields all over the globe. I mean, we saw Japan, Germany, UK. We saw higher inflation in Taiwan and Japan.
SPY trying to push a bit more.
Around the globe, and it's right, 50-50, hike or cut.
Okay, let's see what hedge flows look like. Still rising. Hedge flow still rising.
Technology and the state of cybersecurity stocks, those high-flying names that are even more important now that AI is around. Still to come, big moves because Alex Coffey is standing by his real options trades, taking a look at ExxonMobil, Taiwan Semi, and Disney. So much more when the watchers return. The Dow Cap 428.
Hedge flow still rising. Hedge flow still rising.
My parents didn't really talk about money at all. In
Nvidia still going.
everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
All right, we are back right here on the watch list. Stocks are selling off across the board, and we're looking at some of the action, and some of it is quite. Look at this, Intel on a 4-day losing streak. You're seeing names like Intel down 5.
Yeah, I'll be looking to buy some Intel actually on the dip. ARM holdings. All right, flat at the moment. Intel's starting to come off the low. I'm going to buy some Intel here. Might be a mistake. It's late in the day, but looks like shorts are starting to cover on Intel. And everybody else is like scared of it. I want to look at it. Oh, shoot. Okay, there we go. Intel. Okay, let me go out a couple of months here. Let me go out to July. Monthly. July. Okay, I'm going to buy 47 Delta. That's the 120. I'm going to buy 120, 125. Buy. And I'm just scaling in. Just something small, just so that I feel like I'm in it. $1.53. All right, 120, 125. Could be weak next week, so just be careful if you're going to follow this.
Reason being is that with an increase in artificial intelligence, we're seeing more phishing attempts, more malware attacks, deep fakes, just automated attacks in general because of how sophisticated artificial intelligence is becoming. So large companies are realizing that they cannot scale AI without really scaling cybersecurity. And in fact, if you look at the budget spend of a lot of these major companies like Amazon, Oracle, JP Morgan, they're allocating about 15 to 20% of their IT budgets specifically to cybersecurity. So as an investor, you need to be aware of that. And we think you should have some exposure to cybersecurity. And again, names like CrowdStrike and Palo Alto are two of the best names down.
You said what's been going on heavily benefits names like CrowdStrike and Palo Alto because they actually offer broad ecosystems spanning, such as what?
Yeah, within the companies, what they do. I mean, they're essentially offering one comprehensive platform to these major companies. So, like I had mentioned, Amazon, the Oracles of the world. So instead of going to a bunch of different cybersecurity vendors, different things like endpoint security or identity protection, you can really just use a full service like CrowdStrike. And the founding service
What you got, Andrew? Andrew, NVIDIA no, sell into strength.
Likely due to what CrowdStrike is doing to again offer that one-stop shop, so to speak, with cybersecurity.
So when you talked about the long-term investment takeaway,
take those off, Andrew. Take those NVIDIA off. You know, we could probably try to go a little bit more, but just take the profits and run. 227.50s, I'm done.
Where do we see some of these big names to watch?
Yeah, absolutely. So if we look at what's happened recently, a lot of these names have spiked up over the past few weeks. We're seeing a little bit of a rotation out of some high flyers like these semis, like NVIDIA, like AMD, Intel, into other tech-driven names like cybersecurity. So if you look at the relative strength index of some of these cybersecurity names, CrowdStrike, Palo Alto to be specific, they're now hovering into the 80 range. If you get above 70, historically speaking, that is considered an overbought territory. And if we had this conversation a few weeks ago, we'd be having a conversation around how the fundamentals are very strong of these companies, and in turn, there's actually a lot of potential to see an increase near term in their stock price. Well, we've seen an increase over the past few weeks, and now some of these names are getting into that overbought territory. However, we are long-term investors. We want to think out 3, 5, 7, 10 years. We are very bullish on this AI narrative, and in turn, we believe that you should also be bullish on cybersecurity. And you do want to be owning these names.
So you did say the valuation was looking like it had very strong momentum. You talked about the RSIs, but over the long term, it's still a good play. Can we talk about the M&A activity? I mean, do all the names survive? We just showed more than 10 names in the group. I mean, you've noted that you seem to like
Tesla rolling over.
because of how they're positioned. But what about all
Okay, take profits. People are taking profits now with an hour and 41 minutes to go.
Over the past several years, they've acquired more than 20 companies. So they're in full-blown acquisition mode. Same thing with CrowdStrike. They've acquired about 10 companies over the past, if not more, over the past few years. So we're definitely seeing a consolidation, not just in large companies wanting to just go with one specific cybersecurity platform. We're also looking at cybersecurity companies wanting to acquire some of the smaller names. So it's not to say names like Fortinet and Zscaler can't see continued growth. But if you look at CrowdStrike and Palo Alto,
All right, futures rolling over here. Futures rolling over.
Of like the Costco Walmart war or the NVIDIA AMD war, those are really the two biggest names. And if you look at the type of growth these names have experienced, CrowdStrike has seen a phenomenal revenue growth over the past 5 years. About a $900 million revenue several years ago.
Microsoft, okay.
$5 billion. That's a fivefold in just a matter of a few years.
Little profit taking.
About $4 billion, a little over that 5 years ago. Now it's at $11 billion.
Profit taking.
We're seeing a lot of money from these larger companies flow into the biggest names out there. And so, yes, I do think some of those other cybersecurity names have potential, but I would rather lean into names like Palo Alto and CrowdStrike.
Yeah, because you said not all cybersecurity names are going to win in the long term. I mean, obviously the big players, but not necessarily, and the leaders, but not necessarily the smaller point solution vendors. When we think about AI, you think AI is truly a tailwind for cybersecurity, right? I mean, I know we use semiconductors built the AI.
What's Nokia doing? Nokia and okay. Whoop and okay. Nokia.
Yeah, well, if we just look at how the market's reacted to software stocks. I mean, cybersecurity names like Palo Alto, CrowdStrike,
Oracle.
they are software names. And if we go back just a few months, even before the war that took place, software got hammered. There was a broad brush sell-off with anything software related. I mean, whether you're Palantir, Microsoft, or some of these cybersecurity names, you saw a deep sell-off. And some of these names actually were somewhat cheap at that point. The reason why we're seeing AI be more of a tailwind instead of a headwind is because the market is telling us that. The market has really helped propel these cybersecurity names as of late, and you're seeing more traditional software.
Okay, Amazon turning back up. Amazon
struggle because of some of the efficiency that you can get from companies like Anthropic. So in turn, cybersecurity is getting the right type of respect that it deserves right now, because artificial intelligence is going to increase the risk that I mentioned earlier, and in turn, revenue is going to continue pouring into these names. So definitely bullish on the cybersecurity space, if you could not tell.
All right, yeah, we can tell. Brandon Clark, thank you. Director of Financial Planning, the Clark Group Asset Management. Nice to see you. Really appreciate it.
I understand, Nicole. She understands.
Huge issue for the oil market right now. I know oil's up today, $105 a barrel, but I wonder how much the oil market is looking past these headlines. They're looking at maybe an Iran that produces more, not less. A Venezuela that produces more, not less. They're looking at maybe other countries like the UAE, which, by the way, this morning announced it's going to develop a second pipeline across its peninsula and bypass the Strait of Hormuz, that looking out 6 months, a year, 2 years, 5 years, whatever, that there is more oil than less. And I wonder if that's holding the price of
Intel. Okay, looking for a bounce. Intel.
What you just said is so important. The UAE building a pipeline, right? Yes, this is going to take a little bit of time, but that's how markets respond. Ultimately, Iran's leverage over the strait and the strait's significance is going to decline if other allies and other countries find other ways.
Apache breaking out to new highs. Apache Energy. Energy breaking out above the 50-day. Apache breaking above the 50-day. Energy names.
These are multi-year projects, okay? Commonwealth, to my left, I think I called it Cameron. I'm in Cameron. It's called Commonwealth LNG, is over that way. But over that way is what they call CP2, Calcasieu Pass 2 from Venture Global. In fact, that ship behind us here, which is owned by GasLog, publicly traded company, by the way, partly owned by the Onassis family. That ship is headed to Asia. Venture Global is going to increase its output dramatically when what they call
Okay, back above the 50-day. Apache.
You got to trust me on this. And by the way, Kelly, there are
I've been hit or miss with this one.
construction jobs. These are not like 50 construction workers for a couple of months. These are thousands of jobs over multiple
We needed to
years.
see some rotation this week into software.
We're going to be welcoming in another guest, and that is the governor of Louisiana. We'll talk about the economy, jobs, LNG, AI, and more. Markets down a bit, yields up, oil's up, power lunch back up right after this short break.
For those of you concerned about the markets being up, we're up 7 weeks in a row without a consolidation. We don't have to pull back in price. That said, I am planning for a pullback. I did buy some VIX hedges yesterday. I told you about that. I bought the 22 strike. Okay, VIX is at the low right now, I believe. Corey said VIX at the low of the day. It's below the 200 day. It's still squeezing. I got to believe we're going to see some volatility in the short term. We got Warsh coming in next week, new Fed chair. So that could create some need for hedging. Long-term stuff, if you're thinking out years from now, any pullbacks are going to be opportunities. Okay, TRBCX, RGFX, SPHD, SCHD, Devo, et cetera. All of those longer-term positions that I have in my retirement account, if I ever do retire, I'll probably drop dead. I'll probably drop dead at 100 or whatever before I retire because I really love trading, which will be good for my kids because they'll just inherit everything. And the wife. All kidding aside, sarcasm aside, short term, we're up 7 weeks. Okay, so wouldn't you expect a little bit of consolidation? Okay, this is the weekly chart. Don't want to do that. Okay, this is the daily chart. Okay, the fact that look at the hedge flows. All right, let me turn this back to delta or gamma. You can see mostly purple. Okay, seeing mostly purple is telling you positive gamma is impacting the markets. All right, so that means that prices could stay in this area. Most likely will stay, within 50 to 100 points of this area on the S&P cash futures. We are fading a little bit from stocks that ran up earlier. You can feel the energy. But the fact that this is purple background and not red. Okay, mostly purple. It was red overhead, but purple below. Purple below is support. Purple above would also be resistance. You can see purple right here at 74.70. Bright purple down here. Bright purple down here at 7,400 or so. Okay. So that's supportive. Now, I talked about this as well. Next week, if we look at going forward, this is today. This little sliver right here is today. To the right is the 19th, 18th, 19th, 20th, into next week, right? You can see mostly purple below. There's a little bit of red over here. A little bit of red over there. Let me just boost the color a little bit. Okay. So purple below, again, support. 7,500 is the call wall. Okay, we could stay near the call wall. Look at all this positive gamma over here. Okay. Look at all this positive gamma above and below price. That's supportive. You should be happy that we've got all this support. Looks good. Purple below, a little red above 7,500.
You're saying that you can come to Louisiana, but I want to be clear. You've got to cover your own costs. The people cannot pay higher electricity rates for your data center.
Well, yes, and let me tell you something. The first group that we worked with was Mark Zuckerberg and Meta. And I want you to know that Mark and
Who is this? Louisiana governor. Okay.
responsible deal for both Meta, for his investors, and for people and consumers.
I love listening to this. Look at all this positive gamma.
So what that deal does is Meta is going to pay upfront for the generational power. They're going to put up the money for the grid resiliency and the extra generation that's needed in Louisiana. What that is going to equate to is over a $650 million savings to Louisianians here in Louisiana.
So, like I said, we got Venture Global behind us. They're operational here. They're building out CP2 over here, which is Calcasieu Pass 2. Cameron, you just broke ground on today. What is the other money that goes in and around building out something like that, and how much more investment does the state require,
not just for the facility, but the power lines and the facilities, the hotels, the restaurants, everything. Well, the great news about that is that when projects like this happen, all of those other businesses that feed into these particular projects rise. And so we see Louisiana's businesses having great opportunities that they've never had before. Look, to just give you the scale of it, if Louisiana was a country, we'd be number one in the world in LNG exports. So when they say America's number one, America's only number one because Louisiana's number one.
Louisiana's number one.
66%.
My bigger than Corpus Christi.
Yes.
Texas.
I heard their feet.
I got to be careful. I was there. I'm going back later today.
Yeah.
You're bigger than Texas.
We are. Once and for all, Louisiana has finally got bigger than Texas.
Yeah, I got to be careful, Kelly, because we're driving back to Texas. So, I like them both. I got to be very careful. A couple things you can't see right off camera here in the ship channels. Dolphins everywhere, by the way. It's been just amazing. I'm joking around with the governor. Yeah, I'm not kidding. There's a lot of people fishing for redfish and trout, speckled trout. Then you got
Yeah, I remember redfish fishing.
And the other cool thing, I knew you'd like this.
Louisiana.
The guy that founded Commonwealth, which is the groundbreaking, you can't see it's right over here.
Trout.
Not some Louisiana or Texas oil dude. His name is Bendel. He went to Oxford. He's British. Came to the United States. He helped run Kimmeridge, the big investment firm. So we had a pretty big British contingency here at Commonwealth. For more, we interview him, by the way. Check out the Power Insider Energy Weekly Intelligence piece. I don't like to call it a newsletter. There's a QR code on your screen. We interview Bendel for that as well. Speaking of Texas, I'm going to leave now and drive back there.
It's funny you mention education because Louisiana is the only state in the nation, Brian, that has surpassed 2019 levels in both reading and math. Biggest growth. It's, hats off to them. They're doing something right. Or maybe some would say they had a long ways to go. I'm not going to say it. They've surpassed it. And look what they're doing now. Brian, we really appreciate it.
Great RBI. Should have brought that up. I apologize.
It's not really our, Go to Texas. This was awesome. Great stuff. Safe travels. We'll see you next week. Brian Sullivan.
Thank you.
I want to go fishing now. As he mentioned, I should get Steve on that. Still ahead, the chips are selling off with both the stocks and the SMH semi-ETFs down about 3%. Is this healthy profit taking or is it the start of a broader correction? We're asking Carson Group's Ryan Dietrich next.
Okay, we just continue to roll off here. All right, so a lot of these stocks are pulling back, profit taking into the weekend. Okay, so hopefully you took some profits off. All right. Okay, I don't think I have anything expiring today. Most of my positions are at least next week or out in June. If they're not next week, they're June. June, July, August, September. Okay. Meta hanging out near the highs of the day. That's not bad. Okay, Apple, APA, continuation. Okay, APA, energy, Apache. All right, so energy stocks look good. Coinbase. All right. So Bitcoin didn't do anything today. I thought it was going to get through, hopefully get above the 200-day. Didn't happen. Bitcoin got rejected. So really the strongest sector today is energy. Energy is the strongest sector. Most likely will be into next week.
The markets are selling off this afternoon. The Russell small caps are down more than 2% on rising interest rates. Tech stocks also taking.
Yeah, what's the 10-year looking like? Yeah, 10-year. 10-year yield, 10-year. US 10-year.
ETFs are down 3% after posting solid gains, amazing gains really up to this point. Is the simple profit taking
US 10-year.
Let's ask Brian Dietrich, the chief market
US 10-year. Big move on the US 10-year. That's a bearish signal.
What's going to happen next?
Well, thanks, Kelly, for having me back. And TGIF, everybody. And hopefully, I know Sully had to leave us. Hopefully, he had some good food down there in Louisiana. Let's put some context around this. The NASDAQ 100 just had a 27% rally in 28 days. Right? Wow. We know the S&P, unless we really sell off in the next hour and a half, is going to be up 7 weeks in a row. We're going to say this is simply profit taking. And I get it. You guys had a great discussion before I joined about higher oil, global yield.
Yeah, I would say the same.
Those are concerns, no question about it. But then just let's look at today's manufacturing data. I know it's regional, but some of the strongest manufacturing data we've seen in a while. New orders really soared. So this economy is still solid. I think it's just due for maybe a little pause after a really good, historic 7-week rally.
And I like what you say here that average. We always talk about averages, but I'm sure you've been part of financial planning exercises, funding 529. Say the average return for the market is 7 or 8%. But you say we never have an average year. What do we usually have? Big up years, big down years?
That's right. So I get to work with financial advisors and clients every day. So we take these big picture look. Kelly, the last 76 years, that's back to 1950. The S&P is up like 9.5% on average. So it's pretty good. But here's the thing: only 4 times the last 76 years has the S&P gained between 8 and 10%. So average is not so average. So where are we trading right now? We're like 8.5%, so we're right in that range. So I guess the question is, will we really be flat the next 7 months? I don't think most people expect that. So then the next question is, will we be up or down a lot? We think it's probably higher. And one more level to that, the average up year is up 19%. Now the average down year is down 14%. So again, bigger swings are normal, but we're still optimistic. We came into this year and said we could gain 15%.
Ryan Dietrich, he's really good. No hyperbole, no arrogance, just good data. Good sound judgment. Okay, this little dip. I don't know if there's enough time to do anything else. $1.20. An hour and 20 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is May 15th. S&P starting to bounce.
Just for the listeners, the final 7 months, we're up every time, at least double digits, 13% average. I know it's fun with numbers, but one more fun one here. It's very rare, Kelly, to see the market peak right now, right? In May and June, we only had 2 ultimate peaks in those 2 months, only twice. So it's kind of rare. So I don't, maybe we pull back a little bit after this rally, but I don't think this bull market's done. We think we're still going to have a surprise summer rally.
I'll borrow a technician language. I think Katie's
okay, Amazon trying to go right here. Amazon. Let me take a look at Amazon. Amazon.
Which could be much more of a stronger, more severe pullback.
I'm not one to argue with Katie. I would agree there. And then, of course, where's it going to come from? Technology. We kind of started the conversation there. High momentum.
Amazon.
Good year investing in high momentum ETFs. We're actually
okay, it's below the 20 EMA, so I can't take a long here until it gets back above and the 20 EMA turns up. Amazon. Intel, looking at Intel, that's off a couple of days. Intel, looking for Intel to turn back up.
Finally, and I'm glad you pointed out the stronger manufacturing data. This is not just about the tech trades. So stronger manufacturing data, we've had better jobs data. I know you're amongst those who think that maybe the labor market outperforms, but again, is good news, bad news? I hate to put it that way. That's what's enabled rising bond yields. That's what's now got the market pricing in a Fed hike instead of a
That's a tough question there for Friday afternoon. I'll just put it like this: the higher yields haven't really slowed down this bull market yet. I know today we're seeing that. We came into this year talking about ride the wave, the AI wave, the earnings wave, lots of different waves that are out there. And the reality is, this is still a bull market. It's still solid. There's still more positive negatives, Kelly, and we just think, maybe after a little break, we're still going to continue to have some upside this year.
10-year was in the 60s, in the late 90s. Who knows? Maybe history will rhyme. That would be quite something. Ryan, really appreciate it. Thanks. We didn't have time debt levels then either. Ryan Dietrich from the Carson Group. Let's get to Mackenzie Sagalos now for the CNBC News update. Hi, Mac.
Hey, Kelly. The Senate Judiciary Committee chairman is inviting the CEOs of Meta, Alphabet, TikTok, and Snap to testify about children's online safety. No word yet on whether CEOs have accepted the invitation. It comes as two committee members, Marsha Blackburn and Richard Blumenthal, are pushing for legislation requiring those companies to take more responsibility for their platforms.
Yeah, I mean, it's bad enough for adults. Social media is just like crazy angry. Everybody is freaking angry with everybody. I want to punch the screen sometimes, so I have to turn it off. You know, watch some comedy or something.
On the allegation, Weinstein was being retried on charges that he raped hairstylist and actor Jessica Mann in a Manhattan hotel room in 2013. His lawyers insist the encounter was consensual.
Weinstein is still in court, back and forth. Yeah, Nvidia's still pulling back a bit.
Jerome Powell's term as Fed chair officially coming to an end today. We're breaking down his legacy, the highs, the lows, the hikes, and the cuts after the break.
All right, hope everyone's having a good day. We're coming into the close. Can we get one more run up to the highs, or at least a bounce? IONQ and AAOI, those stocks have been quantum stocks and optical stocks. Those have been taking a break. You got most of the sectors red today or pulling back, with the only strength being in energy. I'm tempted to buy some energy stocks, but I'll wait until next week. No big hurry. I collected a lot of cash. I'm probably about 50% cash in my trading account. I got some longer term things: Nokia, Microsoft, Tesla, Apple, Intel, ARM Holdings, Oracle. Longer dated calls: Nvidia, Firefly, ASTS, Amazon, Wells Fargo, Morgan Stanley, stuff like that. I got longer term options like June, July, or further out, so I'm not really that worried about theta. If we do pull back a little bit in the short term, Ryan Dietrich was just talking about, very seldom do we peak in May. The markets tend not to peak in May. I'll have to go back and check that, but sounds plausible. June, July, May, June, July tend to be good. Let's go see what the statistics here. Statistically speaking, we'll go out 20 years seasonality wise. Let's look at the different sectors. Industrials. Okay, look at July for the industrials. Dow Industrials, top left. You can see what we're looking at. We're looking at the Dow Industrials. Okay, so that's for the past 5 years. July tends to be a very strong month. May, June, July tend to be strong. Okay. It's not until August, September that we start to see weakness. People are taking late summer vacations. By the way, I'm going to take Friday off for July, the July 4th weekend. I'm going to take Friday off. I'm going to take my son down again to DC. I think my whole family is going to go. So my daughter and my wife this time. All right, so you can see July tends to be strong. See industrials, the middle of the chart. Let's see. NDX 100, NASDAQ 100, go out 20 years. Go out for 20 years. July tends to be the strongest month of the year. Okay, so we got a lot to look forward to.
His tenure's not over yet. Kevin Warsh hasn't been sworn in. My understanding that Jay Powell will be the chairman for the next few days. But I think, look, his major accomplishment is that he defended the independence of the Fed when it was under unprecedented assault. And that has overwhelmed his biggest failure, which was he moved too slowly on inflation, and we had 8% inflation during the worst.
We still made 20%, so give Powell a break. We still had 20% gains, the previous couple of years? And whatever we're going to have this year, 20% again? Okay, so this looks good for the S&P. Let's look at the New York Stock Exchange, NYSE. Okay, look at July. Look at July. May, June, July. 20 years. July tends to be good. April tends to be good.
And we're too slow to respond. But overall, for the last few years, we've had a pretty decent, resilient economy.
Remember this chart? Remember this chart, the bounce? Remember that chart? Pretty much dead on.
The one disappointment is that they have not gotten to the 2% inflation target.
David, if I were going to press the point a little bit, and I'm tempted to, I would say, well, defending the Fed's independence, is that kind of easy? Is it kind of easy to say, I will not bow to pressure from the president when maybe he perhaps doesn't feel any real pressure, while at the same time their real job was to make sure inflation didn't happen, and that score he was asleep at the switch.
No, I don't think they were asleep at the switch. I think they misread the economy, and when they realized they had misread it, they reacted very swiftly, much faster than anybody thought, and they got inflation down without a recession. So I associate myself with Dennis's remarks. I don't see how you could say it is easy when you're in the gun sights of Donald Trump, when he's trying to fire
Nobody's safe. Nobody's safe when.
It took great stamina and courage to be unflinching there. I don't think we appreciate what it's like. I mean, for us, it's kind of entertaining, right?
Yeah.
The cartoon of Trump put something on social media with the Fed chair falling into a dumpster. For Jay Powell, it's like having the president of the United States put it.
Let me see.
You have to worry about security. You have to worry about, can you really convince the market that the Fed is going to hold the line against the president who is just unrelenting? So I don't think it was easy at all.
And in an era when we know people, your security, you can't take for granted. So, Dennis, kind of similar question. There is this bill that's now being proposed. It's called the Price Stability Act. And basically what it wants is to strike the maximum employment part of the Fed's mandate and say that they would only be responsible for stable prices. They got a couple of Republican sponsors and co-sponsors. Could something like that, Dennis, come to pass where some might say, look, why is it the Fed's job to worry about employment in this country? What they can and should and must, and this is what Warsh has said time and again, inflation is their responsibility.
Well, given the politics of it, I don't think it's going to happen. But it's not implausible. That would align the U.S. central bank with other central banks around the world that have single mandates, which is price stability. And it's a matter that Congress can change if they wish. So, and when I was there, we discussed from time to time Congress's wishes to perhaps revise the dual mandate, but it is very difficult politics to make that happen.
David, what would you think about going to a single mandate on price stability? And this is an interesting time to ask the question because inflation is obviously above target, and yet I would be sympathetic to the idea that if you tighten in response to an oil price or supply shock, you could make the economy a lot worse.
Right. Well, just because you have a single mandate doesn't mean you can't look through one-time price shocks like energy or tariffs. Look, I think Dennis makes a good point that politically
it's much easier for the Fed to get public support for what it's doing when it has a dual mandate. And secondly, even the central banks that have single mandates, they are sensitive to what happens to GDP growth and employment. So it's not clear to me that in most cases it would make a big difference. Yeah. Where it would make a difference is when it's really finely balanced. Like for now, it's not that hard for the Fed. We're at full employment, so they can worry about inflation. But if the labor department, if the labor market started to fall apart and inflation remains virulent, then they'll have to make a call, and that's where the dual mandate and how much you wage part of the mandate really makes a difference.
Turning now then, David, to Kevin Warsh at the moment precisely that he is taking over or about to take over and what have you. I mean, we now have the market expecting a hike and not a cut. We have global bond yields doing what they're doing, you know, not alarming maybe by historical standards, but certainly on the rise. And so what does Powell's legacy leave for Warsh to either clean up or build off of?
Well, I think Kevin Warsh's problem is Donald Trump. He's not going to be able to talk the FOMC into cutting interest rates now. Donald Trump wants lower interest rates. So Kevin Warsh is going to have to figure out how does he deal with the president, who we know is very impatient. And the concern is that President Trump will be pressuring Fed Chair Warsh to fire some of the Reserve Bank presidents in order to remove obstacles for cutting rates. And I think that would be really destabilizing. I think Kevin's other problem is that he spent 15 years telling all the people who he's now going to supervise that they're idiots and been screwing up. And so he's going to come into a place where I believe the Fed staff and other policymakers really want the Fed to succeed. They want the chairman to be a success, but he doesn't come in with a lot of goodwill given all the things he's been saying about them when they're on the outside.
Dennis, the final word?
Kevin Warsh has the mother of all tricky navigation challenges in the coming weeks and months. On one side, he's got the president. David has mentioned that, of course. On the other side, he's got an increasingly hawkish committee. The well-noted 9 words that Powell used in his last press conference, that the committee, the core of the committee, or the central tendency of the committee had moved to neutral, tells you that the committee is of basically cut or hike mind, and that's going to be a difficult committee to convince to cut interest rates.
Fantastic. Thank you both. Really appreciate it. A lot to ponder over the weekend and into this new era for the Fed. Dennis and David, thanks. Coming up, President Trump wrapping up his 2-day visit to China as the two superpowers navigate a pivotal moment for trade, tech, and geopolitics. We asked you for your biggest takeaway from the meeting. Stay tuned for those results.
Okay, so that looks good. All right, so seasonality looking good. Okay, Nokia, almost back up to the highs of the day, Nokia. All right, they did gap down quite a bit, so need to resolve that. But with an hour and 5 minutes to go, watching. Okay.
It's time to reveal those results from our power poll today. We asked you for your takeaways from the Trump-Xi summit. The broad result is somewhat unsure because, look, more than half said the outcome remains status quo, but 26% said tensions are set to ease following the summit, while nearly as many said tensions are actually on the rise. Make of that what you will. More Power Lunch back after a quick break with the Dow down 450 points. Stay with us.
All right, so what's going on, Alfie? What's it about?
It's like just, all right, tell us the story. Yes, that's ticker DXCM had to bring something from the healthcare world. It's currently up about 5.9%, most intraday since February. That's after activist investor Elliott Management took a stake in the diabetes company and struck a deal to name at least 2 independent directors to their board. Separately, Dexcom also offered a really rosy long-term outlook at its investor day earlier this week. Also worth noting that Dexcom CEO was actually on BTV earlier today. And yeah, he said that customers taking GLP-1s have actually higher utilization of their products, which that's always been a concern for investors of what exactly happens if people are taking GLP-1s. Do they really need these continuous glucose monitors?
You still want to monitor it, maybe.
For those who have diabetes, absolutely. Yeah, I know people, and yeah, these meters are kind of game changers because you can constantly monitor, and they work really well.
And this company also sees the next opportunity being those people without diabetes who want to monitor their sugars too.
Yeah, like I get it. I totally get it.
He was also on our program back in the day.
How much would you pay to have lunch with Warren Buffett and that Steph Curry guy? Someone just paid $9 million for this opportunity. The winning bid came in during an auction benefiting the Glide Foundation. It's unclear who the winning bidder is. They often let us know. But the private lunch is set for next month in Buffett's hometown of Omaha, Nebraska. Meantime, Delta Air CEO Ed Bastian will join us live on Power Lunch on Monday. Looking forward to that. We'll check in on summer travel, jet fuel prices, and a whole lot more Monday at 2 p.m. And a quick final check on the markets where the Dow's down 456 points and the 10-year Treasury is threatening 4.6%. 4,595 with a 13 basis point rise just today. We'll see how stocks handle that into the close. Closing bell starts right now.
Kelly, thanks so much. That's a big story indeed. Welcome to Closing Bell. I'm Scott Wapner live from Post 9 here at the New York Stock Exchange. This make or break hour begins with the state of the markets. After a week that saw more record highs, a red-hot IPO, and now this pullback, and as Kelly was saying, higher interest rates. We'll ask our experts what it all means over this final stretch. In the meantime, here's the scorecard with 60 to go in regulation today. We have been red all day on that move in yields. Spike in oil, S&P and NASDAQ, they've been up for 7 straight weeks, so a little give back isn't all that surprising. NVIDIA shares are lower ahead of its earnings report next week, and a new high for that stock this week. Microsoft shares are higher, though. Pershing Square's Bill Ackman revealing a new position in that name, sending it higher by nearly 4%. And in IPO land, Cerebras is down following its huge IPO move yesterday. We're following the IPO story today as well. Does take us to our talk of the tape. So where do we go from here following this amazing move in AI stocks, especially if rates and oil remain elevated? Well, let's ask the Wharton School Professor of Finance, Jeremy Siegel. There he is. He's also Wisdom Tree's chief economist. It's good to have you back. So what do you make of just the price action in this market, how we continue to trade, and how you view this move in yields, which is substantial?
Yeah, and Scott, I think the Chairman Xi and President Trump summit was a very big disappointment. And I think it was a big disappointment for the market. I remember that in previous summit he had, reporters asked President Trump, well, how did you rate your meeting with the premier on a scale from 1 to 10? And he said a 12. Well, this week, on a scale from 1 to 10, I would give it a -2. Wow. I mean, I think like virtually nothing. The market hoped for some help from China in return for something on Iran, and you can see what happened to oil as a result, a major cause of yields going up. The announcements of trade deals was extremely disappointing. I mean, like the only thing he announced was Boeing. Well, how did Boeing investors react today? Were they happy with that announcement? No, clearly not. And then this is something that's longer term, but worrisome. The threat on Taiwan. We have Cerberus, Andy Feldman, Cerberus say, oh, how important Taiwan is. The semiconductor industry and chips and hell, man, we can't do without it. And then, President Trump goes there, and the first thing that she says is, well, we really kind of own, Taiwan. You may not want to mess with us on this. And, Trump has to make a decision within a few weeks about funding on that. I just felt really down after this summer.
So you think that a lot of what we're seeing today is a reaction to what you think was a whimper of a summit?
Yes, because a lot of it is, look at oil shooting back up, now yields shooting back up. I think there was a lot of hope that there was going to be something with China to help opening the strait. Opening the strait is still extremely important. I mean, we're back to $108, $109, almost 110 on Brent. If there's no action week by week, I see that will be rising $2-3 a week. It'll be rising 2, 3, 4 cents a week. Going into the midterms, everything like this. I just think that this, unless we get some counteraction, this summit certainly did not do it for the market.
Well, I mean, we were primed, though, right, for some pullback at some point. How narrow we've been. How about this stat from Bespoke earlier this week? The only precedent for when the S&P has been at record highs while fewer than 60% of its constituents were above both their 50 and 200-day moving averages was December of 98 into March of 2000. I mean, there's been a lot of commentary, Professor, that something had to give, and maybe this is the beginning of the giving.
December 98, there was still a little more than a year of good times before the bottom fell out. So no one knows, when the top is. I think something, this is what I hear all the time, Scott. People saying, oh, the chip stocks doubled or tripled, but their earnings doubled or tripled. Well, listen, one has to remember that for stocks, 90% of their value is their earnings not this year or next year. It is more than 2 years out. In fact, if you double your earnings for 4 years and then it falls back, you should only get a 20% increase in your stock price. People are just projecting this surge into the infinite future. Now, who knows what will happen, but chips and semiconductors, we used to say, oh, that's a cyclical industry. Yes, I know AI is a secular critical force on top of that. But, project 1 year of earnings into the doubling and tripling of earnings into the infinite future has never made good financial sense.
So it sounds to me like you think some of this exuberance has in fact been irrational.
I think some of it in that chip sector has. I don't think the overall market has. As you said, many more stocks are hitting 52-week lows than highs, which is also unprecedented. Not only those that are above and below their 200-moving average. So the rest of the market is 17 times earnings, which is very reasonable. And then you have this part that's just flying off the top. Yeah, I know there's an AI revolution, but if yields continue and we know we're at 460, you can never ignore the 10-year in any stock market calculation.
I mean, do you think in some ways the bond market is trying to send at least a little bit of a message to the new Fed chair, Kevin Warsh, like not so fast on the idea that you're cutting rates anytime soon in the kind of environment that we find ourselves in today?
Absolutely. I'll tell you what. Not only will he not be able to, there is a month away, and we know a lot of things happen in this world economy. But I think he's going to have a big battle at trying to keep an easing bias. We saw those 3 dissents in the last meeting, and given you're seeing, on inflation with the CPI, the PPI, and now, with oil continuing to go up and the 10-year going up, boy, I think at least it's going to move to a neutral bias. I don't think we're going to get an increase of any sort on June, but that's going to be his battle, I think, in the first Fed meeting.
Even so, I get the backup in yields and I get the spike in oil, but as you've already suggested, investors have been looking through all of this because they're fixated on the 50% plus earnings growth that we just got in technology, which is why they keep leaning into this trade, which is in part why some folks over at Goldman say, yeah, I hear you on the narrowness and how top heavy we've become, but it's impossible to ignore the earnings power, which continues to propel this market. So maybe this is just one of those momentary reactions to what you suggested was a disappointment of a summit, and then we're right back to business as a new week and the days within it begin.
That's possible. I would like to take some of the froth, off of this market, very, very honestly. Listen, the real economy is really strong. The entire report that we had today, Goldman Sachs raised the GDP estimate for the second quarter. I think the Fed is up to 4. I think that may be too high. But yeah, there's strength in this economy. But again, one has to realize stocks are really long-term assets, not just 6 months, a year out. They have to look at what earnings trends are going all the way out, 20, 30
Okay, all of the New York Fangs have pulled back. All right. Futures pulled back. Okay, so we had a nice little run up during the day and some profit taking. So if you took profits, you're probably okay. Nokia.
I'm just saying that I do see some froth in there. And maybe the market will be better off if some of it is taken off.
All right. You've given us a lot to chew on. I appreciate that, Professor. Enjoy the conversation as always. Good weekend to you. We'll see you soon. Professor Jeremy Siegel down at the Wharton School. A little bit of froth, if you want to call it that, coming out of shares of Cerebras today following that high-flying IPO debut. Shares also
lower ahead of its own earnings next week. Christina Partsinevelos is following both of those stories for us. Joins us now. Hi.
Hi. Well, AI infrastructure firm, like you said, Cerebus, is losing steam today after a blockbuster market debut just yesterday. Shares soared 68% above the IPO price in its first session. As Professor Siegel actually just pointed out, shares are really priced for flawless revenue growth. But to be fair, it is a rough take for chip stock broadly after the U.S.-China summit really failed to deliver any breakthrough on chip restrictions, especially for
Hey, you came to visit me? You came to visit me? My favorite kitty cat? All right, let me feed you. Give me 2 minutes. I'll be right back.
Earnings per share estimates in 18 of the last 20 quarters and top revenue 19 times out of the past 20 quarters. Shares, though, like you said, pulling back today, snapping, unfortunately, a lucky 7-day win streak.
And it's going to be a big one next week, and we look forward to covering it with you. Thanks, Christina. Appreciate that. Christina Partsinevelos. How about Microsoft today? It's a bright spot, no doubt, following word that Bill Ackman has bought shares in the company. Kay Rooney joins us now with that story. Hi.
Hey, Scott. So Bill Ackman has apparently been doing some dip buying. His firm, Pershing Square, bought Microsoft after the stock sold off back in February. Ackman making the case that Microsoft is now at a, quote, highly compelling valuation. He revealed the firm's Microsoft stake on social media that was ahead of the quarterly 13F filing. In that post, Ackman calls Microsoft now a core holding for the firm, says they bought well below the company's average historical multiple. Does point to Microsoft's position right now in AI, especially on the enterprise side. Says it operates in two of the most valuable areas for enterprise, Azure Cloud, and then you got Copilot as well. He does also address some concerns with the recent change that we saw in Microsoft's longtime partnership with OpenAI that changes its exclusive rights. Ackman views that, quote, as not a concession, but as part of a deliberate pivot, as he describes it, towards a more open architecture that better serves enterprises. Stock up, as you mentioned, Scott, almost 4% today. Back to you.
All right. Okay, thank you. That's Kay Rooney. Now to our panel. Yardeni Research's Ed Yardeni and CNBC contributor Fund Strats Tom Lee. It's great to have you both. Ed, I'll begin with you, and I want to play off what the professor was talking about, that this has just gotten a little bit out of hand. You agree?
Well, first of all, I wasn't disappointed with the summit because I didn't expect much of anything. I didn't really believe that there was going to be some sort of amazing deal coming out of it. And we are in an earnings-led meltdown. The fundamentals are definitely there for what's been happening, and for valuation multiples haven't really gotten all that stretched relative to earnings. And I mean, that's one of the reasons we came back so strongly since the bottom on March 30th, is investors suddenly realized that the PE had come down to a large extent because E had gone up to a record high and stock is still very much intact.
But you heard what the professor said about the idea that investors are making this bet that this earnings ramp is going to go from here to infinity. I mean, you've been thinking about this. Did you call this like the Buzz Lightyear market or something like that the other day?
This Buzz Lightyear theory of to infinity and beyond.
Are we making a mistake thinking what has traditionally, as he said, been a cyclical part of the economy is somehow secular now, and we're just going to project this out from here to 20 years from now?
I think the AI may be a bigger deal than people understand, and I think the stock market's kind of hinting at it. I think economists usually view the economy as having three main resources: land, capital, and labor. I think data has become a fourth factor of production. And we've all been collecting data. It's been stored away, and we really haven't squeezed it for all it's worth. And that's what AI is doing. It's the digital revolution. It started in the 1960s, and we've accomplished an amazing ability to process a huge amount of data really quickly, really cheaply. And as we continue to do that, guess what? We create more data. There'll be never a shortage of data.
Tom, how do you assess this?
Well, I agree that the U.S. is benefiting the next 3 years, maybe even 10, 20 years from its leadership in AI. But I kind of agree with Professor Siegel that, if I look at the next 3 months, so not 3 years, I do think three tests are emerging for the stock market. One is, of course, how is the Fed going to react to both the underlying inflation risks, The second is the market doesn't really like when inflation is a concern and yields are rising. And I do think we are seeing it now in PPI. I think there is in the pipeline a lot of inflation, not structural, but just inflation shock, but also energy shortage. And the third, of course, is, I think we have a lot of IPO and that's a lot of supply. So I think we're going to face some tests later this summer. So I think the risk reward is still great for tech, but I'm not sure about the broader market.
How would you respond to that? I mean, the market, some have suggested, has been whistling past the graveyard of this tremendous move that we've seen in oil, and now you have yields joining it, and you've had some of the inflation data this week get a little alarming. Have we been doing just that, ignoring what's right in front of our face, and there's going to be a comeuppance as a result?
Tom's view is very plausible that we may have a stretch here of a few weeks, maybe a few months, where the market consolidates. We just had a pretty significant pullback in the market from the beginning of the year, basically, really from October of 2024, 2025, when the big cap stocks had a really quite a significant sell-off. And so, we've already had the pullback. I guess people would like to have another opportunities to buy here. But yeah, I mean, there's still this issue of the bond yield, but I think the bond yield is reflecting a normalization of the economy.
I know, but the parabolic nature of this move, SMH up 6 straight weeks. Yeah, we could end that this week, but nonetheless, up 6 straight. The DRAM ETF began this week with $6.25 billion in assets under management. Finished yesterday with $9.5 billion. It only had $77 billion a month ago. Nvidia up 7 straight days. The Qs have been up so much they need to fall 12.5% just to get back to the 50-day.
And all of that was triggered by the first quarter earnings season, which was phenomenal. As Professor Siegel said, I don't think any of us recall a situation where earnings have been surging in such a way, other than coming out of a recession. So the fundamentals are good. Look, I think the bond market's reacting to better than expected economic growth. It does look as though the economy is going to be showing something like 3 to 4% growth in the second quarter. It was weaker than that in the fourth and the first quarter, and some of that had to do with the government shutdown, then some really cold weather. So I think we're going to be very pleasantly surprised by the strength of the economy, and that's what will keep the market going.
I feel like, Tom, you painted a bit of a conundrum for you, perhaps, and maybe other investors, when you said, yes, I still am bullish on the AI trade, but I don't really like other parts of the market in the environment that we could be in with inflation in the pipeline, as you said, and shocks in inflation, nothing structural, but nonetheless concerning, the rise in oil, the backup in yields. But then if I sit back and I say, well, how can I lean in now to parabolic moves that have already taken place? And at the same time, I don't like any of these other areas of the market because I agree with Tom. Then what in the world do I do?
So, Scott, I'm going to say something that might make the audience think I'm puzzling, but the move in DRAM, in my opinion, is actually somewhat defensive. We know that if you're worried about inflation and petroleum shortage, there's even bigger shortages in memory. So like people are buying what's going to work even if the macro environment gets tough. And I think that's why it makes sense for semis and DRAM to still do really well. And so I think that this pullback is going to be viable there. But to me, if someone's trying to make a bigger bet on tech, I think the really attractive risk reward is still Mag 7 and software. And Bill Ackman's buy of Microsoft really reinforces it. That's why software is actually still among our top picks right now.
Well, Ed, last and quick, you're sticking with 8250, your S&P target for calendar 26?
I am. That's by the end of the decade.
All right. We'll see you again soon. Thanks, cool. Ed. Thank you, Tom. We'll talk to you soon. Back to Christina now for the biggest movers into this Friday close. What do you see?
Let's start with ServiceNow and Experian. They announced a partnership today that will see the two collaborate on autonomous AI agents. The two said in a release that the biggest challenge for agentic AI is the lack of data. They look to mitigate that by incorporating Experian's data into ServiceNow's AI platform, and that's why you're seeing ServiceNow up about 5%. Meantime, Figma shares are on pace for their best day since October after beating Q1 estimates and also raising their full-year guidance. Management really pointed to user growth for its AI design tools for the win. Shares up 13%. We've got the scoop on what's moving. Ben & Jerry's owner Magnum Ice Cream. Reuters reported multiple private equity firms are interested in a buyout of the firm. The stock's been on a rocky road since its debut last year, but is up 10% today, Scott.
Okay, Christina, thank you very much. We're just getting started. Up next, inside the race to go public, our Leslie Picker has some new reporting on SpaceX's upcoming debut, plus instant reaction from star venture capitalist Loeb Tony. He'll join us after the break. We're live at the New York Stock Exchange. You're watching Closing Bell on CNBC.
All right, we got a few minutes to go. 38 minutes to go. I'm just taking some notes for the weekend video.
No, I mean, it's, you know, you look at the population in the United States, they're growing around the world of folks who are dealing with diabetes, and GLP-1 drugs are certainly going to help.
Interesting couple of months for NVIDIA when you think about how the stock has performed since October. So it does look like some of the sheen has come off, but maybe regaining a little bit of its footing. Where do you expect these results to land when it comes to sort of resetting the narrative around NVIDIA?
Yeah, you're right. NVIDIA, it's been fine year to date, but lots of other things have done a lot better in the space. Semis have just been on a tear since the beginning of the year. Part of the issue is that AI is dragging everything else, you know, the sector along with it. You know, we went from the GPUs and accelerators at one point, but then it was memory and semicap and optical and power semis, and now it's CPUs. And I think there's been a preference among investors to play more of those other names in the supply chain, like kind of the constrained names, rather than the raw AI compute names. And it sort of opened up this kind of interesting divergence between the two, because one of them is clearly wrong, right? I mean, the rest of the supply chain can't work long term if the compute names are not delivering. And so this is one of the reasons that we've actually liked NVIDIA, because I do think that there is an opportunity for that narrative to reset and that gap to normalize it at some point. And frankly, for the last couple of weeks, we've started to see it. Like it hasn't been dramatic, but I mean, the stock actually has been creeping up, and I can't remember, it's up 25 or 30% or something like that over the last several weeks. Not dramatically, but like a little at a time, it's been doing really well as we go into the earnings. And I think as we go into earnings, I mean, look, numbers are already clearly low. Jensen and GTC a couple of months ago already sort of put out a target for just some of their data center products, so they call Blackwell and Rubin, to cover $1 trillion from calendar 25 to calendar 27. That would put you at almost $500 billion in calendar 27 just for those products. Wouldn't include other products that they're selling and other segments, and the street is already like.
One big IPO down, several more to go, including SpaceX, which appears to be drawing closer. Our Leslie Picker is following that money. As always, joins us now with more. Hi there, Leslie.
Hey, Scott. Yeah, buckle up. I am hearing from people familiar with the matter that SpaceX plans to flip its S1 public as early as next week and is planning for a listing in mid-June. Elon Musk's rocket company is running what is expected to be a record share sale. Reports say that SpaceX is aiming to raise $70 billion, which is more than double the Saudi Aramco IPO from 2019. The roadshow is expected to be a few weeks away. It will be about a week long to give that company time to market to investors for this record share sale. Now, the plans and the timeline may still change. I'm told they are still somewhat in flux, but that is the working plan. I'm also told by sources close to this deal about the various ways that bankers and lawyers are looking to tap new and different types of investors to help fill such an enormous order book. Well, they plan to allocate to retail. It
might not be as tilted toward, say, the Robinhoods and the SoFis of the world as Reuters had earlier reported. One source told me that they're looking toward retail investors abroad through brokers in places like the UK and Canada and Japan. And the view is that this strategy will bode better to cultivate longer-term retail investors, Scott.
Well, going to be exciting. We know that. Look what happened yesterday, and that was that. So, Leslie, thank you very much. Leslie Bear. Hello, Tony. Plexico Capital's founding managing partner and a CNBC contributor is with us now, as you see. Welcome back. So, what's your take on what we had both yesterday and today from Cerberus? How are you thinking about it?
Yeah, well, Scott, thanks for having me. I think the most important way to understand Cerberus's IPO is it's not really a semiconductor IPO per se. It's really, in my opinion, it's more of a public market referendum on AI infrastructure and the scarcity of that infrastructure. And I don't think the market is reopening broadly for every company or even every AI company. It's opening selectively for companies viewed as bottlenecks in the AI stacks. I think that's why Cerberus matters.
I do think it's interesting how investors, I think, and maybe venture too, and you can speak, of course, to this, are perhaps viewing this company differently than they would traditionally view a pure play chip company, which in essence this is, in that that's always been viewed as a cyclical business, which may have been maybe difficult to attract some venture money or incredibly broad interest out of the gates on Wall Street because of that very issue. It's not necessarily a secular business. Why are we thinking about this one perhaps differently?
Right. I think investors are looking past some of the historical frameworks that we use for chip companies. And we're really thinking about Cerberus in particular as this kind of indicator of the importance of specialized infrastructure for the next phase of AI. That's inference, that's agents, workloads, and probably most importantly, persistent AI consumption. And so I think that's what folks are looking at with Cerberus is it's an indication of, okay, what are the ways that we can decrease the bottlenecks within the infrastructure? And so I think what we're going to see is, what are the other companies that can address bottlenecks? And of course, one of the bottlenecks is the ability for tokens to be efficiently produced and at a lower cost. And Cerberus has developed a solution that speaks directly to that. But again, I think of this company as more of an indication of, hey, this is a referendum on both AI and this shift towards looking for bottlenecks that can be unlocked.
Does it tell you anything about how SpaceX will be received within the market? I mean, obviously there was a lot of hype around this IPO yesterday as we saw firsthand and how we covered it, almost wall to wall waiting for that first trade because we knew how important it was for this market and for investors, for the story, the timing, and everything else.
That's right. Yeah, and I think Cerberus is important as well because it will help establish a valuation framework for this next generation of AI companies that are issuing. And SpaceX is, to your point, probably the most important IPO in the pipeline because it could really become the first true AI infrastructure mega cap liquidity event. And people may still think of SpaceX primarily as aerospace or space, but I think of it more like a vertically integrated AI infrastructure utility with some hyperscale characteristics. And so I think, again, when we talk to what are the key things that need to happen within the complete AI stack, we're looking for the ability to unlock bottlenecks. And SpaceX has the ability now that they've given space to Anthropic and Colossus. I mean, that's not necessarily truly a hyperscaler, but it's more than a neo cloud. It's a little bit of a hybrid. And I think it may end up looking much more like this AI infrastructure utility.
That's an interesting take. So let's take Cerberus, then SpaceX, then maybe Anthropic, and then OpenAI. Can we absorb all that supply coming in this market?
Yes, but I think it's important to separate the valuation from the cash absorption. So the $1 trillion IPO doesn't necessarily require $1 trillion of new money, thank goodness. You know, the floats could end up being just a small percentage. So there'll still be historic raises, but it's large but manageable globally. I think maybe the bigger issue, and I've heard a lot of folks and you in particular talk about this, is portfolio rotation. So if AI starts to look more like an asset allocation category, not just necessarily a technology theme, would that lead to investors reducing exposure elsewhere? Legacy software, tech that's growing much slower, consumer internet, maybe even some mega cap winners to make room for AI infrastructure and AI platforms. That's what I want to look for.
Oh, interesting. Yeah, you always make us think. I appreciate our conversations very much. We'll talk to you soon. Lo, thanks.
Thank you.
All right, Lo, Tony. Still ahead, the new Fed. It's Fed Chair Powell's last day as head of the central bank. So what should investors expect in the new Warsh era? We'll discuss with Allianz's Mohamed El-Arian. The Bell will be right back.
All right, we've got 27 minutes to go. 27 minutes to go. I'm taking notes, getting ready for the weekend. We got Amazon turning back up. Got some out of the money calls that I bought yesterday that aren't going to work. That's okay. We'll be carrying some things over into next week, and June calls and stuff like that. June, August. I'm not really worried about if we get any kind of pullback. One thing I want to point out. Okay, let me just do a couple of things here. Let me add a couple of things. I just want to point out because Warsh will be taking over next week. Okay. All right. So currently we're looking at the broad market reporting its highest collective year-over-year earnings growth since Q4 of 2021. That's important to understand. 84% of companies have cleared consensus earnings estimates. This outpaces the critical 5-year historical average of 78% and the 10-year average of 76%. Why does this matter, Benny? Because people are starting to compare what happened after, say, Volcker, the S&P 500 corporate earnings growth completely stalled. Under Greenspan, he took office 3 months before the 33% 1987 crash. Okay, that's when I started investing. Under Bernanke, he inherited a structural collapse of the U.S. housing bubble, leading to a catastrophic 77.5% year-over-year collapse. Yellen initially encountered an earnings recession between 2015 and 2016. Earnings growth went flat, and under Powell, we had who had a multi-year tenure, of course, he experienced a violent. These are my notes: a violent historical roller coaster of corporate profit margins, pandemic, stimulus, and the 2022-23 bear market. So the markets have already figured in. They've had months to consider Warsh's policies. So that's the important difference. Plus, and this is, you can't overlook this, plus earnings, you can't even compare earnings going all the way back to Volcker as far as what earnings we're doing. Okay, so anyway. Yeah. So if you're worried about the markets, I'm not that concerned. If the markets start to sell off, then we reassess and plan accordingly. next week. Okay, so all right, so that looks good. Okay. All right, so what do we got? We got 21 minutes to go. 21 minutes to go, and the markets have just stopped moving very much. Okay, so there you go.
Welcome back. Today marks the final day of Fed Chair Powell's term, a run that encountered a global pandemic, an historic spike in inflation, and unprecedented attacks on the institution's independence. Our senior economics correspondent, Steve Leisman, here with more on the big takeaways from his tenure. Steve?
Yeah, I wanted to concentrate on the independence issue. Soon-to-be former Fed Chair Powell has shown his successor, Kevin Warsh, how to maintain Fed independence from the president. Soon-to-be Fed Chair Warsh may need to follow at least some of that path. A recent Brookings Institution survey finding the respondents saying that maintaining independence is Warsh's biggest challenge. 75% said the threat was enormous or significant. For years, President Trump has tried to harass the Fed chair out of office, calling him a numbskull, a moron, a real dummy, a major loser, incompetent or crooked, and of course, threatening to fire him. Mostly, Powell maintained what you might call a monk-like silence.
Oh, who? Come on. They're just gonna, they have nothing better to do. It's really annoying. You know, who gives a crap about Greenspan? I mean, not Greenspan. Jay Powell. I think he did a great job. Enough said. Okay, he's going to be Warsh is going to be taken over. We don't have to keep rehashing what the president said and everything else. It helps no one except the narrative over at CNBC. It really pisses me off. It doesn't help traders or investors. I can tell you right now, I can tell you exactly what's happened because I took notes. I've been taking notes recently. All right. And there's really no comparison. The only one I was not aware of was Volcker. And Volcker, my dad taught me, my late father taught me a valuable lesson. He locked in 16% CDs, 5-year CDs back during the Volcker days. I learned a lot about compound annual interest, compounding, right? So I was in college. So under Volcker, I don't know, but under Greenspan, I started trading 3 months after Greenspan took office, and that led to the 1987 crash. And of course, I started right after that. As you know, 1987 December, I bought IBM, and that started my investing career and experience. Under Bernanke, who inherited a structural collapse in the housing bubble. Okay, 77.5% year-over-year collapse in S&P corporate earnings. I mean, how can you compare Bernanke or Yellen, right? Even Powell, he inherited the pandemic, stimulus, all of this printing that we went through, the explosion in M1 and M2, the 2022-23 bear market. That washed. This is nothing like that. So if you're worried about that, I would reserve my concern for now. Okay. If you listen to what people are posting on social media without any context, without an understanding, believe me, there's no comparison to right now. We're at all-time highs, and corporate earnings are beating by 84%, beating the 5-year average and the 10-year average. There's no way to compare them. Okay, we've got 17 minutes to go. I have a dead cat.
Would have predicted, and the best analyst on Wall Street would not have predicted that Google would be spending close to $200 billion in capex this year. I don't think even Google would know this 4 years ago. So it is right to be somewhat concerned because the figures are staggering. I think investors should flow towards where the money is going rather than focus on, rightly so, focus on the return on invested capital. And, the stock market's been rewarding the pick and shovel plays. And as I pointed out, some of those companies have had very, very significant runs. NVIDIA's up 18x since ChatGPT was announced. You have SK Hynix, which is up 22x. You have XT Hyundai Electric, which is up 32x. You have Bloom Energy, which is up 16x. Palantir. So the money is being flowing away from the hyperscalers, at least right now, with the exception of Google, which has done well, to some of these pick and shovel plays. I think eventually, Sam, the question is going to come: is this a healthy ecosystem? Eventually, companies spending hundreds of billions in AI.
All right, I got a few minutes to go. I love watching people get excited about things out of context.
You are not alone, and as you look at some of those numbers, double and triple checking them, because Sam and I regularly are checking second sources to make sure there aren't typos as we see these numbers come across, and they seem astronomical. But we're sadly going to have to leave it there. Really appreciate you joining us today. We both hope you have a wonderful weekend. Sid Juraria from SC Marwar Capital. Coming up next, we've got Options Corner. Rick Ducat will join us here in our Chicago studio to take a look at the options activity on NVIDIA ahead of next week's big earnings report. That's next on Market on Close.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Hayden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
Welcome back to Market on Close. All eyes will be on NVIDIA next week ahead of its earnings on Wednesday afternoon. Expectations are for EPS of $1.77 on an adjusted basis on revenue of $78.75 billion. Shares did hit a fresh all-time high yesterday, but are pulling back today. That would snap a 7-day winning streak for the chip giant. It looks like it will. They are down more than 3.5% right now, unlikely to make up that territory before the close. But of course, NVIDIA, the focus of Options Corner today, joining us, Rick Ducat, our lead market technician, to take a closer look ahead of the Super Bowl of earnings, as some people like to call it. So we know, because we've talked about this name quite a lot, and we regularly look at this chart, that NVIDIA was range-bound for much of this year, but it's since broken out here. With that breakout, how is it stacking up against the sector and the broader markets?
Outperforming the tech sector, underperforming the SMH semiconductor ETF. Not really a super fair comparison, though, because of those high-flying memory names. We had a new competitor join the fray this week, Cerebras, with its IPO. So there's this scramble to find alternatives to NVIDIA's advanced AI chips, which are quite costly and hard to get at this point. Also, keep in mind, too, that there could be even more demand now that China is perhaps going to be allowed to purchase some of these chips now as a result of the president's summit with President Xi Jinping in China here. Also, something else to consider, it kind of locks you into the NVIDIA system once you start using these chips either. It's not like you can unplug it like a computer mouse and just put in a new one. It's a whole big thing here. So I guess it's a good problem for NVIDIA to have.
Okay.
Yeah, certainly.
A little more than 10 minutes to go. Okay. Nokia back to the highs. I've been reducing exposure in my trading account. I'm almost at 50%, 50% cash, 50% invested. Most of what I have are further out in time. June, July, August. Some of these are December, January, and even more. A couple of these Microsoft, I have some December 2027 calls that I need to take profits in. Probably when it gets near 4:30, I'll do that and then buy something a little closer in time. Zscaler, took some profits in Zscaler. I have options that expire next week. I took half of that off. Zscaler had a pretty good day, last couple of days. Okay, I took it off around 1 o'clock, 1:30 or so into that move. You can see Zscaler. I'm not doing as good as Palo Alto and CrowdStrike, but that's the reason why I bought it. I wanted a quick return on my money. CrowdStrike, you can see CrowdStrike is ripping. Palo Alto also ripping. So hoping that Zscaler next week I can take the rest of that off, and it goes ballistic. What else? The Rocket Labs of the world, those inside day, Rocket Labs, ASTS, and Firefly, those pull back a little bit. Okay. Firefly, I'm still holding on until next week. Oracle, that's a long-term trade on Oracle, looking for Oracle to get up to the 300s. 250 by maybe the third quarter, if not sooner. 250. Oracle, we're trading just below 200 now. Inside day, I have March 200, 210s on Oracle. That's a longer term play. Again, the reason why I bought Oracle back in April, the March calls, is because I wasn't really sure about the current environment back in April. We were looking for that bounce. We finally got the bounce. So I was buying calls that were into next year, thinking that I wanted to have extra time just in case the markets did pull back more. It wouldn't affect me as much data-wise. So I can sell those in the future. Once we get to 210 max profit, I'll sell those and probably buy something closer to, say, October, maybe September, when we're moving into June, July. So that's Oracle. Tesla, that pulled back from the highs. Tesla took some profits on, some short-term trades on Tesla. You know how this works, right? Here's NVIDIA. Okay, you get oversold conditions. You want to ride it until overbought. And then once we start to put in divergences, higher lows in price and lower highs in RSI, you want to exit. Okay, you take your profits. Same thing with Tesla. Okay, Tesla had a little run up there. We were lucky enough to get a few points out of Tesla. Apple, same thing. Had a nice run up in Apple, got overbought. You can see this divergence here. We made a higher high in price. RSI made a lower high. So taking profits into that second move up was a good idea. Or swinging. I have some September Apple calls. And I took those off. I had a limit order, got hit. Okay. So I'll get back into Apple probably next week, probably midweek, after we see how OPEX goes and how options fill in Monday, Tuesday, Wednesday. So that's Apple. We did NVIDIA, right? Microsoft, another one, Microsoft. Fortunate enough to get Bill Ackman to talk about his trade. That was mentioned early this morning by Joel, which was very helpful because we caught a good bit of this move to the upside. I had some short-term trades for today and longer-term options we talked about. I'll reassess those next week, but we're fading off the high. So once you get overbought on your RSI, that's where you want to start taking profits on intraday, zero-day trades, zero DTE trades rather. Okay, so next week we'll do some more of these because these seem to be pretty popular. Okay, what else? Morgan Stanley didn't do much, right? Morgan Stanley. Yeah, Morgan Stanley, we're waiting. This prospectus for SpaceX is supposed to come out next week, I believe. The IPO. Morgan Stanley is the number one, followed by Goldman Sachs. Goldman Sachs is a lead, but Morgan Stanley is doing more from the financial picture. Anyway, Morgan Stanley and Goldman Sachs, those are the two big ones. for the SpaceX, which is going to be a huge IPO, I would venture. Okay, Amazon's still trying to break out. So reducing my exposure, short-term options, anything that expires today or next week, pretty much have taken most of that off, most of that risk off. As far as a longer-term trend, like I said, with a new Fed chair next week, there's going to be maybe some more volatility next week. But if you look at Trace and you look out into the distance, I can clearly see purple down below. That's support. Okay, down here is support. This is going out into next Friday right there. Okay, to the far right. 7,500. I don't see us getting too much above 7,500. We'll run into some resistance. Support below 73 to 7,400. Pretty obvious. Look at all this purple. More purple than red. That's telling you positive gamma. That's supportive. Positive gamma is created by traders selling puts down below, as you know, and buying calls. So lots of purple bars there. Okay, Amazon's trying to push a bit more right now. Amazon's trying to go in today. Amazon. Okay. So hope everyone had a good week. 7 weeks up. 7 weeks up. That's crazy. 7 weeks. What a great run up, right? There's no reason to think that this is going to drop off dramatically next week. We got support below, as you just saw with positive gamma. Let's see what what's Cisco doing, by the way. Cisco. Okay, Cisco outside, almost an outside day, encapsulating yesterday's body, the body of yesterday's candle. Okay, a little bit overbought, I think. What was I going to do here? S&P. Oh, S&P. Yields. The biggest issue we have is, I believe, is the 10-year yield. A big spike up. Okay, so this is not good. This is not good. Got a new Fed chair coming in next week. 10-year yield is up big. If you're bullish equities, you want to see this lower. You also want to see commodities lower. Commodities are higher this week, but came back yesterday and today. So that's a good sign. We want to see that fade even more. We want junk bonds to get back above the 50-day. Maybe we'll get that next week. But you can clearly see that traders that would invest in junk bonds, they're highly sensitive, risk on, risk off investors. So when you see this moving below the 50-day, you know that they're clear. They're either have already sold positions and are neutral to bearish, or they're not trading anything right now. Also, IWM, that's a risk on, risk off asset. This is pulling back, so that's risk off. IBB, biotech's another risky asset. Big reversal. That's risk off. XBI. Okay. Risk off. And Bitcoin. Maybe it does something over the weekend, but this is risk off to neutral. All right, so most of our indicators are risk off right now. That just means for short term, right? Okay, I'll feed you. We only got 2 minutes to the closing bell. Can you wait? Oh, we got 50 seconds. 50 seconds. All right, listen, have a great weekend, everyone. Have a great weekend. Risk off. Junk, JNK, IBB, IWM, TNX, Bitcoin, all risk off into Monday. All right, so everything's risk off. Have a great weekend, everyone. The weekend video, of course, will be out around 2 o'clock on Sunday, so be sure to look for that. Otherwise, push away from your screens. Don't think about the markets until Sunday. I'll cover all of that for you, give you an idea what we can expect. Right now, we need to see maybe some more consolidation. Other than that, don't really have much to say. 7 weeks up, that's one of the records. But the markets are they're treading water at the highs. Okay, with good earnings. So anyway, have a good one. Take care. We'll talk to you tomorrow. Sunday. Ciao.